At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. They're even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. They're even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. They're even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. They're even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
Assalamualaikum warahmatullahi wabarakatuh. A very good morning to everyone and selamat datang to Invest Malaysia 2021 Series 2, Reviving Malaysia's Growth Engine. Invest Malaysia 2021 Series 2 is co-hosted by Bursa Malaysia and CGS-CIMB. From all of us here, welcome to this conference. Tan Sri, Dato', Tuan-Tuan and Puan-Puan, for Series 2 of Invest Malaysia 2021, we focus on rebuilding a sustainable economy. This is our 20th installment of the Bursa Malaysia Annual Capital Market Conversation. Before we begin, there are some housekeeping matters that we need to go through. We'll start with the issue on the CPE points. This virtual conference is accredited 10 CPE points. To receive these points, please ensure that you log in using the same email address that you used to register to attend this conference. You can scan the QR code to access the CPE pre-assessment page. Also, please complete it and submit it before 9:30 this morning. Please stay throughout the virtual conference. The post-assessment will be made available on the platform after 12 p.m. today, and do submit that before 2 p.m. later in the afternoon. Regarding the enjoyment of the proceedings today, if the screen is somewhat inaccessible, please check your internet internal firewall settings. And of course, if there's no sound, please check by unmuting the click to unmute button found on the top of your screen. Note that you can also enlarge your screen via the bottom right enlarge button. There's also plenty of opportunities for you to network at the virtual networking lounge in the Hello Virtual event platform. Just click on the networking lounge signage at the lobby on the landing page, or the icon which is located at the bottom panel of the landing page. We're doing this live. We're doing this to ensure that all of us are trying to get the most of this conference, and therefore we would like to also encourage you to pose your questions to the panelists and the speakers at any point in time of the conference. The more you ask, the more engaged you will be, and the more you can get out of this conference. With the housekeeping matters now out of the way, allow me to start the event by inviting the chairman of Bursa Malaysia, Yang Berbahagia Tan Sri Abdul Wahid Omar, to deliver the welcome remarks. Over to you, Tan Sri.
Bismillahirrahmanirrahim. Yang berhormat Senator Datuk Seri Utama Tengku Zafrul Tengku Abdul Aziz, Minister of Finance Malaysia. Yang berhormat Datuk Seri Hajah dan Sri Shukri, Minister of Tourism, Arts and Culture Malaysia. Yang berbahagia Datuk Sabah, Chairman of the Securities Commission Malaysia. Yang berusaha Dr. Fadlullah Suhaimi Abdul Malik, Chairman, Malaysian Communications and Multimedia Commission, Mr. Fabian Bega, CEO for My Digital, Tuan Ruzi Rani Aziz, Chief Executive Officer of CGS-CIMB, Chairpersons, CEOs, and Board Members of Corporate Malaysia, distinguished partners, investors, members of the media, and guests, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and very good morning. Welcome to the second series of Invest Malaysia Kuala Lumpur 2021 with the theme Reviving Malaysia's Growth Engine. We have three exciting capital market conversations to cover today. They are very topical and forward-leaning in outlook and can be distilled into three aspects. First, how Malaysia can provide the structure for the essential financial backing in a manner. Second, how to build confidence to resume economic progress as we move into an endemic state of COVID-19. And third, how we can allow every single nation to benefit from a wider and deeper economic footprint that is competitive throughout the ASEAN and global economies. The depth and weight of these conversations that will take place today will expose us to the inner workings of and provide a clear understanding of how Malaysia's ambition to grow strongly while building an equitable society can be achieved. The first conversation is on post-budget 2022. We are privileged to have Finance Minister Yang Berhormat Senator Datuk Seri Utama Tengku Zafrul Tengku Abdul Aziz once again at Invest Malaysia, and I have the honor of moderating this conversation. Given the recently announced budget 2022, I will try to get beneath the skin, so to speak, and into the minds of the policymakers responsible for this important part of our economy. Malaysia's budget 2022 is the highest on record, with bold steps contained within. While it has sparked some debate within our industry, the current focus leans a little too much toward short-term discomfort, I must say. We must remember that strengths of the budget include focus on job creation, support that will help balance the economic status of all communities, as well as a continuation of the robust response required to emerge from the shadow of the pandemic. And while we may not get all we want, but as a nation, we do get what we need. I do note the record numbers allocated for healthcare and education, two sectors that are critical now and far into the future of Malaysia's national ambitions. Instead of bringing us the annual year-end goodies that short-term pundits usually look for, Budget 2022 appears to be a call to arms for a more inclusive societal effort. For the big and strong, now is the time to step up to the plate and contribute meaningfully. Ladies and gentlemen, the Malaysian economy has shown a good measure of resilience. In spite of headwinds, the world has never seen the likes of before. There have been a few bright spots. Our rapid progress in mass vaccination, as well as healthy progress in the recovery of trade and foreign direct investment. However, there have also been dark spots due to the prolonged lockdowns due to the pandemic, which takes us to the second conversation of the day. As the world economy slowly recovers from the ill effects of COVID, what is the new normal we must learn to live with in order to thrive once again, specifically the tourism industry? Now, tourism is an industry that contributed over 86 billion ringgit with over 26 million tourist arrivals in 2019 pre-pandemic. Clearly, tourism has taken a hard knock, impacting retail, hospitality, and the travel industry, not just here in Malaysia, but also globally. For Malaysia, tourism is a critical growth engine that can drive economic prosperity across the far-flung corners of the nation, as well as within the ASEAN region. Further, tourism plays a key role in developing the micro, small, and medium enterprises, or MSME industry. Therefore, our second conversation is about reviving Malaysia's tourism industry, and we are honored to have with us Yang Berhormat Datuk Seri Hajah Nancy Shukri, Minister of Tourism, Arts and Culture, who will be making her first appearance at Invest Malaysia. This conversation will be moderated by CGS-CIMB's Regional Aviation Analyst, Mr. Raymond Yap. The third conversation for today is also of utmost importance given the speed that technology moves, as well as its potential economic reach and scale. Technology has the potential to create positive impact, not just for the newer sectors of the economy, such as digital entrepreneurship or digital platforms, but also the older sectors, agriculture, trade, and healthcare. They help create efficiencies in infrastructure, industry, and even talent management and development. In addition, technology is a strategic pathway for Malaysia towards the environmental portion of the Sustainable Development Goals. One of the key pillars of the 12th Malaysia Plan involves tackling the changes required for our nation's digital future. Hence, this third conversation will be on the topic of empowering Malaysia's digital transformation with My Digital. Now, allow me to share some of their targets to make the scope a little more tangible. 30% uplift in productivity across all sectors by 2030, 875,000 micro, small, and medium enterprises adopting e-commerce, 80% end-to-end online government services, internet access to cover 100% of households, 70 billion ringgit investment in digitalization, and the need to increase the number of startups to 5,000. Now, taking us through the expected challenges and opportunities, I'm pleased that we will have the Malaysia Relations and Multimedia Commission Chairman, Dr. Fadlullah Suhaimi Abdul Malik, and my digital CEO, Mr. Fiban Bigar, who will be sharing their plans on how to achieve this key digital transformation and what it aims to generate. This third conversation will be moderated by our Bursa Malaysia CEO, Datuk Muhammad Umar Swift. Ladies and gentlemen, I believe these conversations are very timely and much needed to provide insights and answers towards a common goal for the continued growth of a modern Malaysian economy that is prosperous, inclusive, and sustainable. Also, context matters. The conversations we will have today must rise above their everyday labels. It is not just about finance, health, travel, or technology. What is more pertinent is how their strengths can be combined as part of Malaysia's commitment to continued progress in driving sustainable economic growth. Seeing that today's schedule predominantly revolves around conversations and not just speakers, it reminds me of a particularly pertinent quote from Professor Emeritus Linda Lambert from the California State University, East Bay. One good conversation can shift the direction of change forever. Indeed, we are having not just one conversation, but three, plus the closing remarks by CGS-CIMB CEO, Puan Ruzi. Ladies and gentlemen, before I end, please allow me to extend our sincere thanks and gratitude to our organizing partner, CGS-CIMB, and the team at Bursa Malaysia for making today's event possible. With that, it gives me great pleasure to invite our Finance Minister, Yang Berhormat Senator Datuk Seri Utama Tengku Zafrul Tunku Abdul Aziz, to begin our first conversation. Thank you. Rahim, Assalamualaikum warahmatullahi wabarakatuh, and a very good morning. Yang Berhormat Datuk Seri Utama Tengku Zafrul Tunku Abdul Aziz, thank you for gracing our Invest Malaysia Kuala Lumpur Series 2 with the theme Reviving Malaysia's Growth Engine. Now, obviously, our focus this morning will be on Budget 2022 that you tabled in Parliament on 29th October. Now, Wabi, this is the second time you tabled the budget. Before that, you issued the pre-budget statement, which was very useful, I must say. And there were numerous, very extensive engagement that you had with numerous stakeholders. Now, I must say, it is very much an expansionary budget at 332 billion ringgit and comprehensive for the people's well-being, business resilience, and prosperous and sustainable economy. Very much in line with the objectives of the 12th Malaysia Plan for a prosperous, inclusive, and sustainable Malaysia. Now, Wabi, could you share with us your perspectives on the overall approach to this budget 2022, its main focus, and the key measures to support the near-term economic recovery and rebuild resilience for further growth? And are the measures enough to support the 2022 GDP growth target of between 5.5% to 6.5%? Thank you.
Thank you, Tan Sri Wahid, and Waalaikumsalam juga for the privilege of speaking this morning. The focus of our budget this year is rebuilding lives and businesses towards improved prosperity of the larger Keluarga Malaysia. As you have pointed out just now, Budget 2022 remains an expansionary budget. This is to ensure that the recovery momentum is entrenched, economic scarring is minimized, and the economy returns to its medium-term growth trajectory. So concurrently, Budget 2022 speaks to the intent of ensuring Malaysia's medium-term growth prospects remain strong, by building resilience and reforming the economy. As you know, some of the key measures include strengthening public healthcare facilities. This we have allocated 2 billion ringgit additional allocation specifically to continue the agenda on managing COVID-19. Jobs is important, 4.8 billion ringgit to generate 600,000 job opportunities. This is via Jamin Keluarga Malaysia or the Job Guarantee Scheme, with the objective of bringing down the national unemployment rate to 4% by end of next year, and supporting businesses. Some businesses are key as well, especially SME. So we announced a 40 billion ringgit under the program Semarak Niaga Keluarga Malaysia, or Semarak Niaga. This spanning financing facilities, guarantees, and equity financing for every business segment, be it micro enterprises or public listed companies. So the driving of strategic investments include 2 billion ringgit in special strategic investment fund. This is to attract strategic foreign investments among multinational corporations. We will continue the high multiplier infra projects, Pan Borneo Highway, which was launched again recently by the Prime Minister, the Central Spine Road, and of course, not forgetting to continue to help vulnerable groups, including, for example, the 8.2 billion ringgit in direct aid via Bantuan Keluarga Malaysia. This is for 9.6 million Malaysians or recipients. So collectively, Tan Sri, we are confident that these measures will contribute to the GDP forecast of 5.5 to 6.5%, driven, inshallah, by the success of our vaccination program, the reopening of more economic and social sectors, as well as increased external demand from major trading partners. So I am also happy to note that the projection is actually very much in line with the latest projections by IMF and World Bank. IMF projection now at 6% and World Bank at 5.8%.
Well, indeed, thank you, Tengku. So many of us do believe that 6% is indeed achievable, given the expansionary nature of the budget that you table. Now, as I was watching you tabling the budget in Parliament on Friday, I couldn't help noticing that you were very confident in your delivery over that 2-hour period. And I'm just wondering whether, is it because this is the second time you're presenting, you've done it before, or is it because of the MOU signed with the opposition parties that gave you the confidence that this will be the budget that will be passed with a lot of support from all MPs?
Yes, you're right. This is the second budget I have tabled. But if I may confess, Tan Sri, it does not get any easier. So given how the economy has been severely affected by the COVID-19 pandemic last year, really we at MOF and the government had work cut out for us. So I must admit that the challenges are bigger, and we are still trying our best to ensure a sustainable economic recovery. However, I believe what has helped is both the experience of the team and the government and the new approach as well, as you mentioned, via the MOU. On the one hand, the MOU has helped pave the way for growing bipartisan cooperation and involvement, including many levels of engagement that was done prior to the drafting of the budget. However, what has been crucial is the growing experience of the wider team that's involved in preparing the budget, which is, in fact, in the period between Budget 2021 and Budget 2022, we have announced 4 assistance packages this year. We had the Permai, Pemerkasa, Pemerkasa Tambahan, and Pemulih to continuously improve public healthcare capacity, preserve the welfare of the rakyat, and continuity of businesses. And Budget 2022 further complements the measures that we've announced in these 4 packages, and it brings it full circle. Of course, this further builds on our experience and learnings from Budget 2021. Last year also we had 4 assistance packages announced in 2020, from what assistance that is required to how to interact with each other, especially all the relevant agencies and counterparts, and of course the monitoring of the execution via our agency in MOF called Laksana.
Very encouraging indeed. So I think not many people perhaps realize the amount of work and resources that have been poured in, and we do appreciate that, Tengku. So Tengku, if I may zoom in into revenue. So in particular, the year-to-date 2021 revenue and fiscal position. So if you look at the total expenditure has reached 244 billion ringgit for the first 9 months of 2021, and that represents 76% of the total revised estimate of 320 billion ringgit. Now, typically, the government will only spend about 72% by this time, in line with the 71% year-to-date revenue achievement. Are we still on track for the 6.5% data for 2021?
Yes, Tan Sri, we are, but much will depend on our revenue performance, how far we can reprioritize spending, and of course the final GDP outcome. So in line with the opening of the economy and success of the vaccination rollout, we are expecting a stronger revenue collection in quarter four, with the strong growth in quarter four. For example, we're already seeing an uptick in sales tax and service tax collection. This is in line with the reopening of more economic sectors, particularly from the service sectors as well, right? So on the expenditure front, we rationalized our expenditures in 2021 to accommodate the increase in the COVID-19 fund to 39 billion ringgit. This is to finance the additional assistance and stimulus packages. So in total, the overall deficit for this year is expected to be 98.8 billion ringgit, up from the original budgeted amount of 84.8 billion ringgit. So much will also depend, like I mentioned just now, on the final GDP outcome. First half growth, already announced, is respectable, 7.1% GDP growth, and all eyes actually will be on the second half of the year. We are announcing the third quarter GDP very soon, in fact next week, or later this week, in fact, where we will project a weaker than anticipated numbers in the third quarter. This is, as you know, Tan Sri, given the various containment measures in that period. Yeah. However, we are confident that we will see a strong recovery in the fourth quarter following the reopening of the economy safely. So, in other words, we are confident that we are on track to achieve the 6.5% deficit as we had forecasted, as we announced recently for this year, for 2021.
Thank you, Tengku. Now, based on government estimates, revenue stabilization measures are expected to raise an additional 6.2 billion ringgit. Now, the current revenue projection of 234 billion, which is already conservative at only 14.3% of GDP, compared to the 5-year average of 16.5%, has not factored the additional contribution. Now, what are your plans for this additional revenue? Is it to pay down debt, or you're going to increase spend?
Okay, you are right that the new revenue stabilization measures are not factored into the current revenue projection. The revenue projection is 234 billion ringgit. Ideally, the revenue uplift can be used to either improve deficit levels, as you mentioned, or be used in form of additional support measures. So we will see where and how the economy progresses next year. So it is not actually factored as you in the current revenue projection of 234 billion. Another area we have chosen, actually, Tan Sri, to be conservative is the oil price. We also have assumed that crude oil prices will average $66 per barrel in 2022. And in fact, for our longer term forecast, our medium term revenue strategy, we are forecasting $67 per barrel between 2022 and 2024. If oil prices today hold, which is around $83 per barrel, there is also potential for better than expected deficit numbers.
Well, thank you. So in the past, I think we're always talking about, is it 300 million ringgit additional revenue for every dollar increase in oil price. I'm not sure whether that number is still valid, but hopefully it'll be very significant. Now, speaking of revenue again, Tengku, if I may, we're all very grateful that there's been extensive engagement with the various stakeholders. Now, many people in the corporate sector were consulted on many things, so that's truly appreciated. But having said that, I must say that we could not help but be surprised by the one-off prosperity tax, the removal of the tax exemption for foreign source income, and the doubling of windfall profit levy for the oil palm plantation companies in Sabah and Sarawak from 1 to 3%. Now, how much additional revenue is the government expecting from these measures? So I understand that your Deputy Minister has mentioned in Parliament on 2nd of November that there'll be about 3 billion ringgit of additional revenue from the one-off prosperity tax. But could you perhaps provide more clarity on the numbers?
Yep. Yes. Well, before we go to the details, I wanted first to provide some context on the way the budget measures were structured to benefit the country, especially the rakyat. For the B40, for example, the government will be providing cash assistance, taking into account that the B40 individuals do not pay personal income tax. Whereas the M40, who are taxpayers, the assistance is provided through tax incentive and personal tax reliefs, which provide savings for M40. And at the same time, we hope that it will promote consumption. Ultimately, both approaches will achieve the same objective, which is really to improve the cash flow of the M40 and the B40, therefore easing the financial burden for this respective household. All right, so that's just to give you a context. So that's why B40 we have the Bantuan Keluarga Malaysia, and we have other support as well on the welfare front, which increase, and M40 and also T20 we have done some tax measures. With one of the more popular one is the extension of the sales tax exemption on cars till mid next year, and also RPGT for individuals has been reduced from 5% to 0% on disposal of properties after more than 6 years of ownership. So now into the details, Tan Sri. The new revenue measures also include measures like expanding the excise duties on sugar-sweetened beverages, right? We're working together with the Ministry of Health on this, and imposing excise duties on vape and e-cigarettes, as well as other measures, direct and indirect tax measures. However, it is also worth noting that this budget also announced many tax incentives catered for businesses, where the main ones are the exemption period for refurbishment and renovation. We will extend this for the year assessment of 2022, and extension of the special reinvestment allowance also. I think that's another 2 years, so bringing it to total 5 years. And then we're also extending, this is a lot of requests for this, extending the period of carry forward losses from 7 to 10 years, and the deferment of income tax installment for all MSMEs for 6 months. That's another major request by the MSME. So based on the tax revenue measures and incentives and exemptions that I just mentioned just now, some examples of it, it's estimated that the government will have net revenue uplift of around 6.2 billion, which you mentioned just now. This therefore provide either an upside to revenue forecast or additional headroom to further support the economy. So I think there was also discussion on the removal of the foreign source income, right? Based on the Malaysian tax system, remittance actually has been taxed in Malaysia, but we had in the Income Tax Act 1967 was amended and exemption was given. Malaysian residents who remitted money to Malaysia have been enjoying this exemption for more than 2 decades. Therefore, we discussed and we feel that it's timely for the government to revisit such policies. So the removal of foreign source income exemption should not be taken as a negative move to discourage FDI. As an opening market economy, I think you know this quite well, Sir Tan Sri, the attractiveness of the investment ecosystem is not only determined by incentives. Significantly, the ecosystem also depends on the comprehensiveness of the country's tax system that is in accordance with the international tax standards, so which ensure that taxing right and fairly distributed to the jurisdictions. This to avoid any practices of tax evasion and tax avoidance. So I think this is important. It's signaling, so by reinstating Malaysia's right to tax, we are signaling the message that we do not condone to such practices. We've seen other countries, Hong Kong, Singapore, and others have either removed or amended their laws to ensure it meets the international standards. You mentioned just now on the palm oil levy, the windfall levy for palm oil, the government did not only increase the levy percentage, we also increased the threshold for Peninsular Malaysia and Sabah and Sarawak. So this will benefit the producers as well.
Well, thank you. So Wabi, now you're talking about 6.2 billion ringgit. Now back to prosperity tax.
Yes, prosperity.
Yeah. So obviously for analysts, many of them, they do appreciate that this is one-off, but the fear among many of the analysts that once you've done once, then it may be tempting to reintroduce it again whenever the fiscal constitution target is not being met. So how would you allay the fears of the analysts, Wabi?
Well, let me first assure you and everyone else that Cukai Makmur is one-off. These are extraordinary times, and the Cukai Makmur will be implemented in that spirit. So it will be utilized actually to ensure our public health system is more resilient in the face of any threats in the future. It's also important to note that not all companies will be impacted by the Cukai Makmur. It is estimated to impact not more than 250 companies actually, and those having more than 100 million in chargeable income, right? So in fact, we can see that different parts of the world, countries have decided, in fact, many of them permanently increase their taxes in the near future as they recover from COVID-19. But we're doing this one only for Cukai Makmur, and it's on top of the 100 million, and then the marginal increase in tax is 9%, right? So we see in UK, for example, they have increased their corporation tax permanently, right? And then Saudi as well increased the VAT. Indonesia as well have increased the tax bracket for individual, especially the top earners, which gone up to even 35%. VAT also increased in Indonesia. So to put things into perspective, I mean, as the chairman of Bursa, among the 900 plus public listed firms on Bursa Malaysia, 145 made over 100 million in their financial year 2019. But in the financial year 2020, only 125 such companies as listed actually earn more than 100 million. And if you look at Bloomberg data, only 113 companies achieved the same pre-tax earnings level across the last 2 financial years. So it's a very small number of companies on the stock exchange as well. So of course, we have seen some knee-jerk reactions in the market following the announcement. However, after over a week, we have seen movements in the KLCI, the FBM KLCI, to normalize back to the range, which is about slight small 1 to 2% decline compared to the pre-budget 2022 levels. Yeah, but nevertheless, there could be a case whereby the impact of the higher tax rate to be partly outweighed in light of the broad-based economic recovery in 2022. So moreover, we have seen several large corporations who have said that one-off Cukai Makmur proposed in the budget will not affect their dividend payments. So I'm happy to hear that dividend payment to shareholders. TM also, for example, Telekom Malaysia, Tenaga Nasional Berhad. So they all have, even Axiata has stated their support to this effort. In fact, people ask me, why don't we do windfall tax, right? In fact, before this, where everyone will be affected. They were saying about the glove companies. One example is Top Glove. Top Glove also have said that they are happy to contribute to the Cukai Makmur. So far, the company itself have paid approximately 2 billion ringgit in corporate income tax this year, and not expected to impact their dividend payments. So in the medium term, I've said it's one-off, but in the medium term, the view is to consider options to reduce the reliance of direct taxes and widen the revenue base. You will hear much more on this when the Fiscal Responsibility Act, which I mentioned in the budget speech as well, will be tabled next year, which will cover the medium-term revenue strategy that will outline the mobilization stages of revenue measures. We want to review our tax legislation and modernize our revenue administration. So Cukai Makmur certainly does not fall in that spirit.
Well, thank you. Indeed, I do know that many corporate, they're happy to do their part to step up and contribute in times of need. Now, if I may move to capital markets. Now, I think I must thank you and the team at MOF for not imposing the capital gains tax on securities. So I think the challenge for that would be to us, if it's imposed, there'll be a dampener to trading volume, especially among the retail investors. Now, so therefore, I must say that the increase in the stamp duty is not unexpected, I would say. So from that 0.1% to 0.15%. But what many were hoping, though, would be for the 200 ringgit threshold to be retained and not to be removed altogether. Now, when we did the analysis, so very much depending on the volume, but if we base it on the 2020 volume, the total stamp duty collected would be about 500 million ringgit. Now, assuming the same volume and the same trading pattern, with the removal of the threshold, the amount could go up as much as 2 billion ringgit, so fourfold. So obviously, many brokers are requesting, could you perhaps consider not removing totally, but maybe increasing the threshold a little bit, as opposed to removing it altogether.
Yeah. Thank you, Tan Sri. We, MOF and the government, will continue to assess our revenue ecosystem. We need to do it holistically. We need to collaborate as well with the business community. We want to develop revenue policies that follow the international best practices. So on this matter, while the government imposed a higher stamp duty and removed the limit, it is important to note that the government also exempted the service tax on brokerage services related to trading of shares listed on the stock exchange. So this is to ensure that the stock market remains vibrant and the brokerage services remain competitive. So we are looking at it holistically, Tan Sri. We will continue to monitor this and engage the business. I understand that removing the limit may have challenges as well at this point in time. But through our assessments, this was seen as at the time during the discussion, as you correctly pointed out, when you talk about capital gains just now, this is like a middle ground as opposed to the imposition of capital gains tax, which was one of the major requests from various parties when we engage in the budget. This will have a much bigger impact to the stock market, Tan Sri, as you would have, as you know as well. Yeah.
Indeed, agreed, Tengku. Tengku, if I may move to the medium-term fiscal consolidation. So the 2022 fiscal deficit is expected to be lower at 6% compared to 6.5% for 2021. Now, this is very much in line with the commitment to lower the average fiscal deficit for the medium term 2022 to 2024 down to 5% average and subsequently to between 3% and 3.5% of GDP by 2025. Now, this is more gradual reduction, so we do understand the need for an expansionary budget to stimulate economic growth. So I'm fully supportive of that. But can you share with us the views of the rating agencies that you've been engaging in recent days and week? Are they receptive to the gradual reduction? Because many of them were sharper reduction. And are there any threats of rating downgrade by any one of them?
Yes, we had a good session last week with all the rating agencies. It went very well. On growth in general, the view of the rating agencies is that the signs of an economic recovery are underway for Malaysia. Some are projecting growth for 2022 that is more optimistic than our figures. One rating agency was telling us they're expecting GDP growth to be around 6.9%. And on fiscal front, in general, of course, the view is that consolidation pathway is consistent with ours. They understand where we're heading on in terms of fiscal consolidation. The rating agencies expect Malaysia 2022 fiscal deficit to consolidate between 5.5 to 6% of GDP, which is what we have also forecasted, against a 6.5% this year. Right? This year we assume a 6.5 to 7% for 2021, but as I mentioned, it looks like we're heading to a 6.5% number. But the expectation of a gradual narrowing of our fiscal deficit takes into consideration our assumption that for further economic normalization, and we need also to look at increased petroleum-related revenue from higher oil prices. So they assume that as well. But when you look at our growth prospects, along with the new tax measures, this really has seen as the potential revenue increase beyond what the government's current expectation. They've highlighted also that our access, Malaysia's access to deep domestic investor base, where we have the ability to tap domestic financing without needing to access our reserves. This really underscores the country's highly rated government liquidity risks. So that's also something that they have factored in. Given what we've done in the last 2 years, tapping into our highly liquid and diversified local domestic investor base.
Thank you, Tengku. On medium-term revenue strategy, what are the potential new tax measures that will be considered by the government moving forward? So naturally, the question keeps coming back about GST. Are you going to reintroduce that to broaden the revenue base of the government?
As I mentioned briefly just now, that some of the medium-term revenue measures that we are contemplating today include considering options to reduce the reliance on direct taxes. And we need to really widen the revenue base by shifting to consumption-based tax. We need to now look at reviewing the taxation and tax rate scope of the existing SST even for now. We need to opt for a more reliable consumption tax, which you mentioned just now, the GST, the value-added tax. And we need to also continue to explore new sources of tax revenue, such as taxation on the digital economy, for example. And in line with the government and the Prime Minister's commitment to make Malaysia a carbon-neutral country as early as 2050, this budget emphasized on measures towards making Malaysia a low-carbon nation. So as a start, we announced the voluntary carbon market, which is actually by Bursa Malaysia, that will be launched. And Bank Negara will provide financing for SMEs adopting low-carbon practices. So as part of the 12 Malaysia plan, the government is now looking into imposing carbon tax. And the Ministry of Finance is currently working with the Ministry of Environment and Water on the imposition of carbon tax. So on GST in particular, back to that consumption tax issue, it is still ongoing. The current priority of the government is to sustain the recovery of the Malaysian economy. So concurrently, improvements are being done to the existing SST regime as announced in Budget 2022. I think the timing will be key when we can reintroduce or introduce new taxes as when the economy recovers and stabilizes.
You mentioned timing. So based on what's been stated before, government expects the government debt level to go below 60% of GDP only in 2024. That's been said before.
Yes.
So does this mean that any new revenue sources will only be rolled then and not earlier?
Yes. Well, the answer, really, notwithstanding the new measures proposed under Budget 2022, we mentioned about duties on sugar, vape, and related products, even taxing on small value goods imported abroad. The current priority of the government is really to sustain the recovery of the Malaysian economy. Once this fully entrenched, either in 2024 or 2023 or even sooner, right? Then we will resume our fiscal consolidation path, including via the introduction of new measures. So we will definitely go down the path when you look at the deficit. We are expecting, in fact, in the 12 Malaysia plan, the target for deficit is around 3.5% by 2025. So that target still holds. But going there means that we will have to reduce debt to GDP by 2025 to around 60% as well.
Well, thank you, Tengku. Can I go deeper into expenditure? So when it comes to expenditure under the 12th Malaysia Plan, some 400 billion ringgit have been allocated for development expenditure, and that would include the rehabilitation of government agencies such as Tabung Haji, Felda, and various private finance initiative projects. Now, does the 75.6 billion ringgit development expenditure cited for 2022 include the cost of rehabilitating these agencies?
Well, yes. The short answer is yes. The DE, the development expenditure allocation in budget 2022, the DE is around 75.6 billion ringgit. This will include rehabilitation cost of government agency. For example, 1.14 billion ringgit for the rehabilitation of Felda, and another 187 million ringgit for the rehabilitation of Felkra. You mentioned Tabung Haji just now. As you're aware, the rehabilitation program is done via the establishment of UJSB, this Urus Harta Jamaah Sdn Bhd. As at the end of this year, end of June this year, the total committed guarantees for UJSB stood at 21.1 billion ringgit. So yes, the answer is it does include those numbers, the rehabilitation costs of government agencies as well in our development and expenditure line.
Thank you for that clarification. On OE, operating expenditure, so we have your typical fixed costs, such as emoluments, pensions, and gratuities, as well as the debt service charges, have been on the rise. Now, more than 2/3 of revenue are currently used to fund this spending compared to, say, 40% a decade ago. Now, that means that we'll have less money available for productive spending, if you like. Now, how do you view the trajectory for operating expenditure going forward?
So on the operating expenditure issue, this has always been a challenge over the years, right? For example, the budget for next year, budget 2022, the locked-in expenditure involving emoluments, debt service charges, retirement charges, and transfer that we have to do to the states actually is more than 70% of our OE. As such, going back to your question, Tan Sri, yes, the trajectory on OE will definitely increase because of annual increment in emolument, pension, and the higher debt servicing requirement as we, need to borrow more to fund some of the initiatives that we announced. But to address the increasing commitment, the government is proactive in ensuring sustainable revenue generation in the short and medium term. So in addition, the government needs to take prudent measures in rationalizing OE, as well as adopting a more targeted approach when it comes to subsidies and assistance. We've been discussing this in government as well, right? So we need to also, complement this with the exploration of more sustainable resources of revenue via the MTRS, by the medium-term revenue strategy, as opposed to, continue to rely on non-tax revenues. This will, as you know, entail widening and diversifying our tax revenues as soon as our economy is back to where it was before, right? Before COVID-19. And as I mentioned earlier, once the FRA, the Fiscal Responsibility Act, is stable, this will be done via the medium-term revenue strategy.
Thank you. Well, thank you. If I may move to the last part, which is about sustainability. Now, naturally, this conversation would not be complete if we don't talk about sustainability. Now, I must say that you have always been a great proponent of ESG, and this has been since your banking days. And now that you are in government, I'm glad that you're following through with even greater conviction. And it's great that the government has also committed to be a net zero greenhouse gas emission nation as early as 2050, and to stop the commissioning of new coal-fired power plants. Now, as we know, under the previous plan, there's supposed to be 3,500 megawatts of coal-fired power plants to be implemented in 2031, 34, and 37. And this is off the table. So Alhamdulillah, I think that's great. Now, as COP26 is progressing in Glasgow as we speak, I must say that we're all heartened that Malaysia will be a signatory to the Glasgow Leaders Declaration on Forest and Land Use, as well as the Global Methane Pledge. Now, perhaps you may want to reiterate the alignment of Budget 2022 with the 17 UN Sustainable Development Goals.
Yes, Tan Sri. Following what was highlighted in the recent IPCC report and what has been at the center of discussion in COP26 recently, we've been following this closely here. We must make the necessary policy changes now, if we truly want to avoid the disastrous effects of climate change. Just like climate change, the COVID-19 pandemic has shown that most countries actually are still unprepared for multiple concurrent crises. We can see that the vulnerable groups are more affected by both events. So therefore, in our long-term sustainability efforts, it is crucial for the government to plan around the social issues as well as on the environment, which the pandemic has brought to the fore. In this context, the progress we have seen in the areas of innovation, development and commercialization of sustainable technologies during the pandemic can, and actually should be further encouraged and promoted. This is especially important as previous waves of rapid industrialization have shown numerous negative consequences. So we must not repeat this. Therefore, in Malaysia, beginning with the budget last year, we have mapped out budget initiatives to the SDGs, to the Sustainable Development Goals, allowing us to better match the national landscape of financing programs with SDG-related projects. As a result, we are actually amongst the 10 countries in the world which have fully aligned our national budget to the SDGs based on the United Nations assessment. So based on this progress, we have continued to do so in Budget 2022, which we recently tabled. This will anchor and drive several initiatives of our 12 Malaysia plan, which was tabled earlier, and the plan will build on what was achieved from the 11 Malaysia plan. So overall, among some of the Budget 2022 measures on sustainability include transition towards low carbon practice. This is some of the measures I mentioned just now, the VCM by Bursa, the voluntary carbon market, matching grants also to encourage SMEs to use sustainable raw materials, renewable energy, etc. Environment and biodiversity, second one, we're given quite a big allocation here, total allocation of around 450 million ringgit. We want to focus on initiatives such as nature conservation, empowering local communities as they can be the biodiversity guardians, ecological fiscal transfer, and NRW, and non-revenue water. Thirdly is a community empowerment. This is, what we announced, we match grants to NGOs, and that's worth 100 million ringgit. This includes tax incentive for social enterprises. Government social and impact procurement program also is being looked at, and funds for UNDP on tourism, as you know, especially for startups, NGO, and local social enterprises. And we are hoping to also launch our first government ringgit-denominated sustainability sukuk, which is earmarked at 10 billion ringgit. So really, we are trying to make sure that we are more focused and want to skew more and more of our budget measures to the sustainability agenda.
Thank you. Very comprehensive indeed, I must say. Now, in order to achieve net zero, obviously there are numerous pathways that the government will have to actually look at. Now, if you look at the stock take of the emissions that we have, based on the 2016 data, the nationally determined contributions, so Malaysia as a country emits about 335 million metric tons of carbon dioxide equivalent for 2016. And 75% of that is very much contributed by the energy and transport sector. So naturally, if we're going to make a difference, we need to address these two sectors. And therefore, we fully understand the priority to deal with coal, to reduce that and eliminate that from our energy mix, and also to encourage more renewable energy. Now, in many of these, obviously, it will require investments in new technology and so on. Now, based on the recent study done by BCG and WWF Malaysia, which is going to be launched at COP26 on 12th of November, it's thought that Malaysia will probably require about 0.8% of GDP per annum in terms of investments in green energy and green projects and so on. Based on today's GDP prices of about 1.5 trillion ringgit, so that means about 12 to 15 billion ringgit of investments per annum. To your mind, is this doable from government's perspective?
I think it's doable. It has to be doable because if you look at the estimates, 0.8% GDP, what you mentioned is correct, but about 12 billion annually. But to put things into perspective, earlier in April this year, we actually got issued a sustainability sukuk that's around $800 million for eligible social and green projects aligned to the UN's SDG. This will enable Malaysia to not only meet its commitment as a responsible nation and signatory to the Paris Agreement, but also further its efforts to advance its people's socio-economic well-being. It's also a testament to our efforts in combating climate change, as well as accelerating the transition towards a more resilient and inclusive economy in line with 12 Nation Plan. Other notable sukuk issuance we had this in the social front is our first of its kind fully digital sukuk prihatin, which actually has a voluntary donation embedded in that sukuk. This was actually done in response to the public's request to participate and contribute to the rebuilding of the nations post-COVID-19. So moving forward, as I mentioned earlier, the government plans to issue up to 10 billion ringgit of ringgit-denominated sustainable sukuk to finance eligible social or nature-friendly projects. And this will be complemented by our whole-of-nation approach on sustainability. So the government, financial regulators, and not forgetting the private sector will all play a pivotal role to furthering Malaysia's sustainability agenda. I'm proud to say that the financial sector has also played a key role in complementing the government's strong leadership in sustainability. Every stakeholder is now demonstrating a shift towards sustainable finance, which will be an impetus to the green economy transition. For the general public, education is key in changing Malaysians' attitude towards the environment. Towards this end, we have set up ALAM, which is the Environmental Education Fund. This will be done through long-term, intergenerational, and education-focused initiative. While at the same time, we need to forge partnership with the public and private sectors, especially civil societies, besides advocating policies among the regulators and ministries for better governance.
Thank you, Tengku. Tengku, back to the greenhouse gas emission, 21% of GHG emissions are actually contributed by the transport sector. So I must say that in your budget 2022, one of the biggest beneficiaries will be the EV industry. So I think the need to move to a CV actually is certainly necessary. And numerous incentives. So we're talking about exemptions of import duty, excise duty, sales tax, road tax, as well as in-road tax reliefs. Now, what else can we do to position Malaysia as an attractive investment destination for EV, as other countries in the region, such as Indonesia, they are also aiming to become a major EV player. So what can Malaysia do to be in this space?
Yeah. Well, from the government's perspective, and MOF especially, we are always committed in ensuring the offering of financial enablers and incentives that will further spur the local EV industry, as well as attracting more investments for this segment. And as you rightly pointed out, Tan Sri, we actually have begun with a focus on accessibility and inclusiveness towards the ownership of EVs via tax incentives. So this in turn will reduce the cost of owning an EV, making it more accessible to the general public. Moreover, we have complemented this with the income exemption for individuals of up to 2,500 ringgit on the cost of purchasing or installing the rent, hire purchase, as well as the subscription fees for EV charging facilities. In terms of the overall policy on EV, the government via MITI will look into identifying new strategies to promote this industry, especially in attracting foreign investors. This will outline a number of specific initiatives, including those to strengthen the development of the EV ecosystem. This includes the standards. When you look at manufacturing of critical components, we also need to make sure we establish standards to support the EV ecosystem and encourage research and development to develop local technologies. These have actually been discussed, Tan Sri, with the MITI Minister during the Budget 2022 engagement. This move, which is in line with the government's goal to reduce carbon emissions by the transport sector, is expected to encourage investments in terms of EV production or its components. We develop infrastructure to support, like I mentioned just now, EV charging stations, as well as increase the consumer demand for EV vehicles. The EV-related incentives will also support the development of high-skilled green jobs in Malaysia. So overall, these incentives will be able to support the implementation of the low-carbon mobility blueprint, as well as help improve the country's air quality index.
Well, thank you. Now, I must say this is very much indeed and supported. Now, having said that, I must say that the approach taken by industry has always been to move from the high end and towards the lower end. So my request to our players, whether it's Pro2 or Proton, would be to truly develop an affordable EV vehicles. Because I think there's a great demand for that, and I think that'll be blue ocean. So I do hope they actually work on that soon, if I may. So YB, time flies when you're having fun, as they say, and we are getting very close to the 50 minutes allocated to us. Before we conclude this session, may I invite you to convey a message you'd like to deliver to our fund managers and institutional investors, and indeed other investors to the capital market.
Yes. Again, Tan Sri, thank you for this opportunity. Allow me to reiterate again that Budget 2022 remains an expansionary budget to ensure that the recovery momentum is entrenched, economic scarring is minimized, and the economy returns to its medium-term growth trajectory. Concurrently, Budget 2022 speaks to the intent of ensuring Malaysia's medium-term growth prospects remain strong. We want to build resilience, and we want to continue to reform the economy. In the medium term, we will support the target to reduce our fiscal deficit to 3.5% to GDP by end of 2025. This is as stipulated the 12 Malaysia Plan, and in achieving this, institutional reform will be pursued via the Fiscal Responsibility Act, which is set to be tabled in Parliament next year. The government will also continue to assess its revenue ecosystem holistically. We will collaborate with the business community. We want to develop revenue policies that adheres to international best practices. Ultimately, much will depend on the economy's recovery trajectory. Once this is fully entrenched, we will resume our fiscal consolidation path. On the topic of recovery in particular, we are encouraged by the findings of the World Economic Community, IMF report recently, the World Economic Outlook, that they are projecting growth to be second highest in terms of average real GDP growth in 2021 to 2026 for those in the A-rated category. Furthermore, we have seen promising signs, be it on the vaccination front, where over 75% of the population and nearly 96% of the adults are now fully vaccinated. On investment, we've seen improvement nearly 70% to 107.5 billion ringgit in the first half of this year, and the continuation of high-impact projects. On consumer sentiment, we're seeing improvement there in consumer sentiment, as we've seen in the improved index in the third quarter 2021, and also, of course, the pent-up demand for travel and leisure. And finally, on trade, which saw 24.7% year-on-year increase in exports to 110 billion ringgit for September of 2021.
Well, thank you, Yang Berhormat Tengku. Yang Berhormat Tengku, you've been so generous with your answers and your time. We truly appreciate those answers and your candidness, if I may. So if I may take this opportunity as well to express our sincere gratitude to you and team at MOF, at CASA, KETSA, and other government agencies for the trust given to Bursa Malaysia to work on developing the voluntary carbon markets leading up to the domestic emission trading scheme. Inshallah, on our part, we'll do our best to support government's and national agenda, if I may. So with that, ladies and gentlemen, thank you for joining us. Thank you, Yang Berhormat Senator Tengku, and wish you a very productive session ahead. Thank you.
Thank you, Tan Sri. Thank you for having me.
Thank you to both Yang Berhormat Tengku Zafrul as well as to Tan Sri Abdul Wahid Omar for that very insightful conversation. There are plenty of takings, particularly in terms of how the budget 2022 will be actionalized. Of course, we're also looking into ESG elements of the budget as well as how corporates in Malaysia as well as abroad can galvanize our institutions to achieve for a better greener environment. We'll go for one short screen break. We'll be right back and continuing our session at exactly 10:10 a.m. We'll be right back after this.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
Welcome back. I hope you have had your fresh cup of coffee so that we can move on to the next session. In this particular session, we shall be discussing on the issue of reviving Malaysia's tourism industry. With this, I have the pleasure to invite the Minister of Tourism, Yang Berhormat Datuk Sri Hajah Nancy Shukri, to the stage, as well as Raymond Yap, who will be moderating this fireside chat. Raymond Yap is the Regional Aviation Analyst at CGS-CIMB. Over to you, Raymond.
Yes, good morning, everyone, and good morning especially to YB Nancy for making time
Good morning,
off
Raymond.
to be with us. Yes, good morning. So I
Yeah,
understand
good
that you're
morning.
in Jakarta, and you had a very exciting day yesterday, and also
Oh,
hope that you
yeah?
had a
Yeah, thank you. Yeah.
okay.
Uh,
Excellent.
thank you
You
very
can
much.
tell the audience more about what you did yesterday. That was very interesting to listen to. Tourism is a very important part of Malaysia's economy, and the borders are finally reopening. Just yesterday, we had the announcement by the two prime ministers of Malaysia and Singapore that the vaccinated travel lane between Singapore and KL will open up on the 29th of November. So this is a great time to talk about tourism and the opening of the borders. And we also know that you personally were in Singapore to help to make this happen. So we'd all like to thank you for all your efforts and also to all your colleagues in the cabinet. So, so at this stage, I'd like to hand over to you for your presentation, YB.
Oh, thank you very much, Raymond. Bismillahirrahmanirrahim. Assalamualaikum. And a very good morning, Raymond and everyone. Thank you for having me here today. For a start, I would like to share with our audience an overview of Malaysia's tourism industry. Next, please. In addressing the revival of Malaysia's tourism industry, we have to go back to pre-COVID times. In 2019, tourism accounted for 1 in every 4 jobs in Malaysia, or employment of 3.6 million people. Tourism had contributed 15.9% to the national GDP, with 26.1 million inbound tourist arrivals and 86 billion ringgit Malaysia receipts. So, meanwhile, domestic tourism contributed to 103 billion ringgit in receipts with 239.1 million visitors. It's so nice to mention all these figures, right, Raymond? At that time, Malaysia had been working hard to regain the travelers' market that was affected due to the series of unfortunate events that had hit us, as well as the high competition and international marketing strategies of those surrounding us. We had seen the overall improvement between 2016 to 2019. I know you're interested in these figures as well, where year-on-year tourist arrivals had increased. However, when COVID-19 happened, many things were cancelled, including our Visit Malaysia year 2020, and with it, the blueprint to reclaim the market. Here we go. Okay, next. At that juncture, MOTEC's role had shifted to our capacity to provide support to the stakeholders. While control focused on vaccination rates and containment of the virus, with it we pushed for several financial aids and incentives through Budget 2021 and economic stimulus packages, such as, I think you have heard of this, Permai, Pemerkasa, Pemerkasa Plus, and Pemulih. It was an intervention move for us to at least provide a safety net while tourism was on hold, and gave us the ability to reset and change our outlook. Going forward, our focus is to continue improving government assistance programs for small, medium enterprises with better identification of the needs of the industry to ensure a more efficient and inclusive approach. Well, ladies and gentlemen, as we imagine the future of tourism, 2 fundamental elements become vital for the restart of the hospitality and tourism sector, that is resilience and adaptability. These 2 elements are what makes us able to prepare for the move as a country to the endemic phase. We have been mentioning this all the time, and to allow domestic tourism to flourish. It also becomes important because we see there is a drastic change to travel experience and four key trends moving forward. First is demand evolution, where travelers' preferences and behaviors have shifted toward the familiar, predictable, trusted, and low risks. There is greater importance placed on pre-trip planning and transparent access to information. Travelers will also expect greater flexibility and more favorable terms for future bookings, such as flexible cancellations. And secondly, health and hygiene have become a vital criterion for choosing destinations and tourist activities, where travelers prefer destinations with established infrastructure and high quality medical facilities and an easy to follow health safety protocol. And in addition, access to affordable coronavirus testing also becomes an important pull factor. The next trend is innovation and digitalization, where COVID 19 is proving to be a catalyst in the tourism sector's quest for innovation and integration of new technologies such as biometric recognition, e wallet, cashless payment, contactless transaction, touchless check-in and online promotions and marketing with virtual experience. Last but not least is sustainability. The lockdown period has indirectly spurred the restoration of the environment and allowed destinations to reorganize the tourism model to be more sustainable in all aspects, including the need for the workforce to be adaptable and the opportunity to promote lesser known destinations, which would not only broaden the spread of tourism's economic benefits beyond hotspots, but also address existing concerns associated with crowds. These key trends that I've mentioned could incentivize investments in the tourism sector in a post pandemic period. Even more important now that our borders will be opening soon, starting with the Langkawi as the international pilot project. Next slide, please. Ladies and gentlemen, a country's tourism growth is only as good as the industry's ecosystem. Each stakeholder has a role to play, and MOTEC's role in tourism has always been to facilitate the growth of the industry. The latest UNWTO barometer finds that 60% of experts predicts the 2020 and a return to pandemic 2019 levels in 2024 or later. Thus, in regaining global competitiveness with the new mega trends, MOTEC developed the National Tourism Policy 2020 to 2030 with a focus on efforts to further increase revenue, secure smart international and national partnerships, empower local communities, and ensure the sustainability and resilience of the industry for future uncertainties. This policy will be carried out through the six strategic thrusts, which are number one is transforming the governance capacity of tourism sector, related agencies to create a synergistic dynamism and harness their tourism core skills, such as effective engagement with all stakeholders, including state governments or agencies. Secondly, is creating special tourism investment zones with attractive incentives to drive the development of high value, creative and inventive tourism and cultural products and services. This will encourage public private partnerships and increase private investment. Currently, MOTEC is working with the Malaysian Investment Development Authority or MIDA to identify and develop the zones. Excuse me, I need to drink a bit first. Well, thank you. Thirdly, is to embrace the whole spectrum of digitalization and provide the necessary tools for the tourism industry to be internationally connected, perform rigorous data analytics of tourism futures, and shorten the supply chain. Fourth is to enhance demand sophistication through targeted marketing, diversifying products, and improving destination attractiveness to appeal to high value tourists so they will stay longer, travel more widely, and spend more. Fifth is to reinforce the role of tourism and culture as a catalyst for economic development in a sustainable, responsible, and inclusive manner in order to ensure the continuity of national treasures for current and future generation apart from generating income. And finally, to upskill the human capital excuse me, to ensure excuse me, the tourism workforce excuse are future ready, to ensure the tourism workforce are future ready, able to deliver quality service at all levels, and increase the expertise and specialty within the field of tourism, as well as improve professionalism. Next, excuse me. This is the after diving effect, Raymond. Anyway, in short, the way forward in tourism will focus on sustainability and increasing tourism revenue, which are important indicators in influencing a country's economy, where it prioritizes quality over quantity. The commitment to sustainable and responsible tourism will strengthen the role of tourism as a catalyst for environmental protection and the preservation and conservation of our culture and heritage, as well as ensure that remote communities and products are also uplifted. These features are also able to make Malaysia the world's preferred ecotourism destination, in line with MOTEC's aspirations and Malaysia's commitment to the 2030 Agenda and the 17 Sustainable Development Goals. In conclusion, inclusivity and cooperation is the way forward to bring about growth in tourism. The government, states, and private sector must come together to attract investments and chart the way to the growth of the tourism industry. Only by doing so, this would ensure that no one gets left behind. So I think, for the overview, perhaps that suffices for us to share with the audience, Raymond. Thank you very much.
Yeah, thank you, YB. Thank you for your sharing. And
Thank you.
I was interested to hear about the national tourism policy, which I did not hear of before. You
Oh, yeah.
mentioned something interesting in that tourism policy, which you intend to work with state governments and maybe private sector players to set up special tourism investment zones. What does that
Yeah.
actually mean?
Well,
What can we
actually, yeah.
expect?
Thank you. This is something new. Thank you for asking that question, because this is one way for us to create a new zone for every state. We want the government and the private sector to work together. You see, we are not the business people. We may not understand what the investors would like to have. So what we have suggested to the state government, we have talked to all the states, okay, to introduce the new national tourism policy 2020 to 2030. We want at least all the states to think of the best, because land falls under the state, Raymond. Since land falls under the state, therefore it is just good for them to work with the investors, and investors are the people who can see the potentials of business. So there are a lot of potentials in our country. I've been going around, especially even in the rural areas, because I think they are able to see the potentials on how they want to build up new areas and also to create new niche segments that I mentioned earlier. So because most of the investors, when they go to the state government, um, the state governments, a lot of, well, most of them, they might have been hindered by their own restrictions, the state policies like land and all the other policies that they are trying to protect in the states. But the time actually it is no longer business as usual. So it's time for the investors to go to the state government and say we can see the potential of this area. Okay, I'm being biased. Let me talk about the Kuching site that is near Santubong, for example, the Pantai Damai. Yeah, there's a lot of potentials there. So they can create new resorts, and then also some of the criteria that would be considered under new investment zone is that it's not just about the resort, for example. They need other facilities as well. Maybe, for example, banking sectors, all the commercial sectors there, and also retirement homes is part of them, and hospitals. Apart from the maybe theme parks, it is going to be a big thing. But maybe different states would look at different criteria. It's not the same all the time. It all depends on how the investors put forward their ideas, and let the investors share with us. And what does the government need to do? Because some people, when we talk to the state government and industry players, when we introduce the Dasar Pelancongan Negara, what people want to know is what's in there for them. So in our case, we have financial assistance to tourism infrastructure providers. For Mortec, for example, we, with the government has set up the tourism infrastructure scheme under Bank Pembangunan and the special tourism fund under SMB Bank to build and maintain their tourism facilities in 2020 and 2021. So the allocation for tourism infrastructure scheme, for example, under the Bank Pembangunan alone is about 1 billion. A total of 542.27 million has been approved and allocated to the eligible applicants, and 178.55 million has been disbursed. But anyway, having talked about the the new national tourism policy, people will be interested in what is available there, and investors need to know all this. And perhaps as a government, I'm in the government, but as a government, we need to think of how we can assist them. Of course, the investors want to know. They want to know, okay, what would be best for them? Corporate tax incentives, maybe, and the policies that are friendly to them. So we need to think of all this so that they will be encouraged to create the investment zone for the various states. So that's my take for now, Raymond. I can
Okay,
talk about a
okay.
lot of things. Money.
Right, right. Well,
Yeah.
talk about the diving event that you attended yesterday, and how can we as individuals also experience what you experienced?
Well, we are opening it up for people to know what we have been doing. Okay, this is under heritage conservation. What we had been doing, it's under the ASEAN, the ASEAN. We call it ASEAN. Let me try to recall. Okay, OMIL. Okay, ASEAN underwater mini land landmark. Okay, what we did was, okay, we had about 11 monuments there, and it includes 10 monuments from the various countries in ASEAN. So there's another one extra that is to symbolize all the 10 ASEAN countries. So we placed the monuments underwater. That was in Pulau Bidong, and people asked us, why Pulau Bidong? Because Pulau Bidong is the pulau where we had this we have this MOU with the University Malaysia Terengganu. So when we did that, this is one way for us to conserve our heritage. This apart from just having our other products on the mainland. I think they have been quite common already, and this is something new. And how would this be able to pull or entice people like yourself? Like myself, I have to learn how to dive, okay, in order to make sure that I go underneath there. I went to hold our LCC there, you know. This is to attract new niche interests. We have divers and we have people who come from the ASEAN countries. And another way is to also to attract investors to build infrastructure like this, pull people to discover new places. So this is something that is very, very, of course, it is a restricted resources in many states, okay? But this is another new product that will also help to generate new income. New income,
Okay.
because you know the government always use excuse as limited resources, limited funding. We want the investors to come in. I would
Okay.
like you to go to Pulau Bedok and see this
So
for
just
yourself.
just to make clear, Pulau Bidong is a diving site already, but in addition to the natural beauty, you've also planted monuments relating to each country, 11 monuments in total, uh, one
Yeah,
for each of the ASEAN countries and one representing the
right.
whole of ASEAN. So divers in Pulau Bidong can actually enjoy the natural scenery as well as those monuments which you planted there.
That's
That's right.
that's right.
Okay,
Yeah. Yeah. But
that's
of course,
great.
you know, there are new interested, or you call niche interest in tourism, like photographers. They want to go underneath to start
Mm.
videographing or to take pictures, you know. So this is another new interest that we want to entice new people to come in. So
Okay.
we hope that with this promo, there'll be more people doing diving, snorkeling, and also going to places where we have already planted
Yeah.
the monuments. Yeah,
Okay. That's good.
yeah.
Congratulations on your newfound diving
Oh,
skill.
thank you. I'm happy because we managed to get it done, and personally, I have held the KLCC towers there. Well, thank you. Yeah.
Okay, let's talk about something bigger about the reopening of Malaysia's borders. So,
All
as
right.
we mentioned just now, the Singapore KL VTL is going to start on the 29th of November. But
That's right.
other Malaysians from other parts, especially from your part of the world, Kuching, KK,
Yeah.
Penang, not
Yeah.
quite able to travel to Singapore yet. When is that going
Yeah.
to happen? And do you have any indication of when the land border on the causeway and the Tuas second link will reopen for travelers?
Well, actually, Sarawak just contacted me last night when they heard of the announcement by Singapore and Malaysia. Well,
Okay.
of course, Malaysia is starting. Yeah, they want to know how they can go about with it. Malaysia is just kickstarting international tourism for vaccinated travelers, beginning with the island of Langkawi as a pilot
Mm,
destination under a travel bubble initiative in the fourth phase of the National Recovery Plan. Well, Raymond, I want to make sure that I must make sure I keep mentioning Langkawi first, because this is our pilot project, so we cannot leave it out. The PM, our PM, Yang Muhammad Datuk Sri Ismail Sabri, announced on the 22nd October 2020, recently, Langkawi Island will be open for vaccinated inbound tourists beginning on 15th of November. So tourists, if they want to come to Malaysia, international tourists, they just go to Langkawi first. This is our initial plan, but suddenly Singapore working with Malaysia on vaccinated travel lane with Singapore that starts on the 29th November. But you know, the condition that they have placed was, okay, after they stayed in Singapore, the tourists stayed in Singapore for 14 days, then only they can go to Malaysia. But we don't want Malaysia to lose out, Raymond. I mean, as a Malaysian minister, I want to make sure that we also want Malaysia to gain something out of it. So, okay, they can stay in Singapore for 14 days, and then they can go to not just Johor, but they can also go to Langkawi. And upon arrival in Langkawi, for international tourists, regardless of where they come from, they must go for under another swab test for the fifth day. But when they stay in Langkawi for the seventh day, After that, they can go to any part of Malaysia, Kuching or wherever, Sabah or other parts of the country. They can go to Genting, because Genting had been asking me, So this is effective 29 November, which we did not expect earlier on that it would be that soon for the other places. But what we want is we want to make sure that Langkawi, Malaysia also gain from this. But having said that, Raymond, it took a lot of negotiations and also coordination, not just with other ministries, but also with the National Security Council or the NSC. The NSC comprises of three levels. Okay, the technical level. The technical level is where we just put up our proposal from the ministry on the SOPs. And secondly is the quartet level. The quartet is where they have already reduced, or whatever maybe the SOPs, they have come up together and say, okay, we only go for Langkawi. So that's the decision by quartet, which they have to bring it to another level. That is the National Security Council meeting chaired by the Prime Minister. He chaired this and like what they have announced on the VTL. So now with the VTL in mind, we are tuning the Langkawi SOP to complement the relaxation of international travel via the VTL. So as
And
COVID-19 situation has improved, sorry,
yeah,
okay,
and
can I elaborate a
yeah,
bit more?
sure, sure.
Yeah,
Please
okay.
continue.
COVID-19 situation has improved. We are looking forward, Raymond, to strengthening other ASEAN countries' cooperation. Besides that, we will also be collaborating with green neighboring countries such as ASEAN countries like Cambodia, the countries that have come here, Cambodia, Brunei, Thailand, and Vietnam, to promote products and tourist destinations. Despite all these initiatives, the COVID-19 SOPs are still applicable and should be strictly adhered to. Yeah, okay, over to you, Raymond. Yeah.
So one question about the Langkawi VTL. From which countries will you allow travelers to enter Langkawi? Is there a list? Is that for the whole world or just a selected list of countries first?
Well, there are countries that we have to avoid in terms of high risk countries, though I have not been able to list it down yet because we only got the approval or the information last night. So we will, of course, share this with the public later. That will come under our SOPs, I mean, our news later. But as it is now, we have to make sure we have to confirm the list of the countries which fall under the high risk countries. They did not mention the names of the countries yet to us because we just asked for the information last night because we want to make sure that we are not leaving anyone behind. But of course, we have to be realistic and also be practical about the countries that we are going to open. This again, we have to refer back to the Minister of Health and also the immigration authorities. They will be the ones guiding us through the national security. Or maybe I have, well, okay, we are very, very efficient here. I just got this listing of the countries, okay? In Europe, we have Russian Federation, Ukraine, Romania, Serbia, Georgia. These are high-risk countries, and
Okay.
also Slovakia, Bosnia, and Herzegovina. And for US, we have Suriname, Martinique, Guyana, Saint Kitts, and Nevis. So far, we only have those in the list for the
That's a
time
very
being. I
short
think
list. A very short list. So
yeah, at the
meaning that
moment, I think it's based on the cases as well and how they handle their cases. So for now, we only have this. As I said, I just
yeah.
got it.
So
We will.
that sounds like the vast
It
majority of
sounds like
countries will,
every country can come to Malaysia, right?
yeah, except those small number of countries, right? So that
Yeah,
sounds very good.
yeah. Yes. But anyway, Raymond, this may not be exhausted fully yet. We might be
Okay.
receiving more later because, as I said, we only got information about the situation last night, but the list of the countries are only known now. So except for all these 11 countries, so we will be
Okay.
updating the the nation as soon as it's been finalized. Okay.
Okay, okay.
Thank you,
You know,
Raman.
the Langkawi, sandbox program, as you mentioned just now, that's starting on the 15th of November. That's something that
Mhm.
Thailand did in Phuket, back in the middle of the year, and now they've moved forward. They've opened basically the whole country to a large number of countries which they consider low risk, including Malaysia, and without
Mhm.
quarantine, entering Thailand without quarantine. When are we actually going to move towards that? Right now, arrivals into Malaysia still have to be quarantined for 14 days, except for arrivals into Langkawi, where they can roam the island for 7 days before traveling to other parts of Malaysia. Thailand has moved forward. Uh, how fast do you think Malaysia can move towards where Thailand is right now?
Okay, excuse me. I mean, as you already knew it, for Langkawi, there is no quarantine. And then even for those like the VTL, there's also, I hope I'm right, no quarantine. There's also
Yeah,
no quarantine.
no quarantine. Yeah.
And then if let's say they come to Langkawi, and then after that they want to go and explore other states in the country, um, we I believe that will be the SOP. But anyway, we have a special committee to monitor the development of Langkawi. So we will
Mm.
see to that. At the moment, as you see, Langkawi is still no quarantine because the whole island is already a quarantine island.
Yeah.
I believe Malaysia, yeah, that's why. You see, since we are going towards endemic phase, since we are
Right.
going towards that, we hope
Mm.
that because now I have to say this because I've not been traveling overseas.
Mm.
I also don't want to be quarantined, but we have to make sure that our SOPs, like maybe 72 hours before they come in, they have to be they have to undergo the swab test. So rest assured, our approach is once again, we want to open and we wish to open, remain to open. We don't want to after we open and then we close again. So that's why we have to be very, very cautious. So this is
Okay.
just taking a helicopter view lah, Raymond. So
Okay.
as I said, from Singapore, no quarantine as well. And then from Langkawi. So they can go to Langkawi first and then go elsewhere. It is
Okay.
one way to also help economy in Malaysia and Langkawi. Yeah,
Yeah. Yeah, so sounds like Malaysia is going to take the approach that Singapore is taking by opening gradually to an increasing number of countries, and
that's
not
right.
the sort of big bang reopening like the US is doing, from November 8th, basically vaccinated travelers from around the world can go into the US without quarantine. So Malaysia is more taking the cautious step-by-step approach rather
Yeah,
than the
correct.
US approach.
That's true. Yeah, that's true. I think
Right.
that is good for Malaysia as well. Yeah, we're very
Mm.
cautious and just to make sure that when we open, it's open um, until we are not going to close anyway. So there is no
Yeah.
closing.
Yeah.
Open once for all. We open without closing. All
Yeah.
right.
So,
Thank
so I
you.
think the other thing is that the arrivals into Malaysia in terms of tourist arrivals, the largest numbers come from within ASEAN. So we have made the step of opening up the VTL with Singapore. And how about Thailand and Indonesia? These are also two big markets for Malaysia in terms of tourism.
Well,
How are there?
sorry. Thailand and
Thailand and
Indonesia.
Indonesia? Yeah, how are the
Yeah. Okay.
discussions going on there?
I just want to inform you that today the Prime Minister is going to Indonesia. So this will
Right.
be one of the topics. Okay, and then for Thailand, we have not really discussed with them on the details. But as I said, actually, our strategy first is domestic, second is ASEAN countries. So ASEAN
Mm.
countries that will include Thailand, and then of course Singapore is already done, and then Brunei, Thailand, and the other neighboring countries. That will be our next move. And Indonesia is PM is going there today, and then and the rest of the countries. So we even
Mm.
talking about international already. So our ASEAN countries is part of our international tourism plan. Okay.
Mm. 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 Okay. in terms of the COVID pandemic, I'm sure that a number of hotels or tourist locations they've suffered bankruptcy or closure, things like that. I mean, have you received requests from these private sector companies to give additional assistance, and is the government willing to go beyond what has been announced in the budget, to help these companies?
Well, thank you for that question. Actually, Motec has planned a variety of strategies to boost domestic tourism, including the implementation of even incentive redemption programs. I believe earlier on, Tengku Zafrul have spoken, so I'm sure he has touched on how they're going to assist the tourism industry. Anyway, we have some incentive redemption programs like discounts, we have rebates, we have vouchers offered by the local airlines, the Malaysian Association of Hotels, and also the purchase of cultural products. As of October 2021, Malaysians had redeemed nearly 40% of these incentives with the full opening of tourism and interstate activity across the country. This figure is expected to increase steadily. But going back to your question with regard to helping the hotel, some of them face bankruptcy. But anyway, that has to be verified, because some of them they have to do it for some business strategy. I'm not denying that, but I think I have to verify that whether it is to close down totally or whether it is to reset or to restart. In the tourism industry, I think in the budget, we are also given some kind of funds to help fund to reset and also to restart the SMEs and the SMEs that have hotels and also other businesses. But anyway, a swift recovery of the tourism industry relies on strong fiscal support. So we are also pleased that the government has allocated 1.6 billion ringgit under the budget for 2022. This will enable the ministry to continue playing its role as one core ministry to contribute to the country's economic recovery post COVID-19 pandemic. Well, Raymond, actually, I hope the people will also understand that we do not have the funds, we do not hold the money. We have to request from the Ministry of Finance, and we are so lucky that the Minister of Finance is very supportive because he understands the context of the tourism industry being in this situation, and then they're willing to support us. So our approach is to get more parties involved and commit to more sustainable and competitive strategies to revitalize this industry. So I think some of them, we have been mentioning this all the time. Like we have the Penjana tourism financing, about 600 million for specific financing for tourism sector. And then we also have the wage subsidy program, matching grants for repair of budget hotels, 50 million in matching grants to companies to organize arts and culture related programs, and 60 million in terms of incentive funds for the purpose of promotional activities, including domestic tourism, and many more, because we want to have a higher class in terms of better standards of facilities or infrastructure for the new tourists to come in. I say new is after this COVID-19, under our 2020 to 2030 tourism, our new tourism policy, we want more high yield tourists to come. So we
Right.
have all the assistance from the government to assist our industry players. Yeah, thank you,
Okay.
Raymond, for
That's
that question.
Yeah, that's great. So we you have about 12 minutes to go, and I'd like to go back into history to talk a bit about the trend for tourist arrivals into Malaysia. So I looked at the
Yeah,
statistics, Tourism Malaysia, and if we take out Singapore arrivals and just look at arrivals from everywhere else, between 2014 and 2019, which is that 5-year period prior to COVID, Malaysia grew its arrivals by 18%, 18%, but Thailand, for instance, grew by 60%, Indonesia, Vietnam by 70 to 100%, Philippines by 70%. So we seem to have underperformed, our neighboring countries in terms of tourism growth. Now, why has that been the case, and what can we do differently going forward to make sure that we don't fall behind our neighbors in terms of tourism?
Well, thank you. I also have to go back to history, Raymond. I think if I go back to history, we are talking about the branding for Malaysia during that time. Despite the branding Malaysia Truly Asia that has been famous within the ASEAN countries and also worldwide, it has been apparent that amongst the ASEAN countries, Malaysia is underperforming compared to Thailand and Indonesia, and currently taken over also by Vietnam and Philippines. We are aware of that. So Malaysia's tourism growth has lagged behind its ASEAN neighbors due to various reasons. For example, number one is a series of negative events that have concurrently happened, which kept tourists away during the period of year. If you remember, events such as the loss of two Malaysia Airlines planes and subsequent restructuring of the flag carrier, and a return of a lung burning haze caused by wildfires in Indonesia during that time. As I said, we are going back to history. And secondly, besides the stiff competition with greater advertising and promotion budget, particularly for Indonesia, Philippines, Vietnam, and Thailand have made these countries more visible, attractive, and interesting for travelers. And of course, the Malaysia Airlines rationalization program also resulted into reduced direct flights into Malaysia. This has made traveling into Malaysia more expensive and unattractive due to many transit hours. The hassle of changing flights or even flight times that are not suitable for connecting flights, especially with European flights. I like to highlight all these, because this going back to history. Anyway, destinations such as Phuket, Thailand, and Bali, Indonesia are destinations that have very sentimental value and have long bonding ties to its travelers. For example, a couple married in Bali will then have its honeymoon in Bali and will repeat every other honeymoon in Bali. This is just one example, remember? Even growing older, they will come back with their grandchildren just to walk down that memory lane again. Hence, Bali becomes a repeat destination for them. Um, Other than Thailand, since the based arrivals are lower in these countries than Malaysia, uh, small differences will show higher growth, and Malaysia is always receiving higher tourist arrivals in ASEAN, albeit the decreased arrivals from Singapore. The arrivals from medium and long haul, such as from East Asia, shown positive growth. But that's history. We do have our strategies, Raymond. How do we go forward? Tourism Malaysia, our backbone agency, has come up with new strategies to regain the market and attract. This is promotion for Malaysia, Raymond. Anyway, this is to attract, to regain the market and attract international tourists to come back to Malaysia once borders reopen. So other countries are competitive as well. Among others, for example, we have this is to boost segmented tourism. I think I've talked about uh, creating niche segments or special interest holiday packages. Example, family fun, eco adventures, islands, and beaches. This is one of the best ways to enhance demand sophistication for travel while focusing on experiential tourism. Focus should be given to the unique experience of homestay and agrotourism, such as durian packages, which not many other countries have, gastronomy promotion through food trail. And just for information, Kuching City yesterday just won the UNESCO gastronomy creative network city. So this is another promotion. So other incentives like vouchers, discounts to meet individual travelers' requirements for small group packages. So, what better way to entice consumers to spend than providing vouchers and discounts on holiday packages. So focus should be more on digital vouchers rather than traditional, by working closely with established online platforms, and also those belong to industry players. So this strategy is in line with the national tourism policy, which emphasizes on digitalization. In addition, incentives can also be provided through product owners, transportation providers, and hotels. And another thing is also to forge smart partnerships. Two core elements in smart partnership that must be integrated are, one is to harness public-private sector partnerships and intergovernmental agencies. I mentioned to you about the national tourism, the investment zone. So we want to tourism products and co-organize tourism programs and events, both physical and online, through public-private partnerships. This is very important in order to have. This is one way to go forward. And secondly, is also to enhance collaboration between government and non-government agencies, such as Malaysia Healthcare Travel Council. A lot of some countries, they come to Malaysia for medical, and also education. Malaysia Global Services. A lot of now we have more universities for people to come and send their children over to learn and to study here to further their education. Next is also to strengthen cooperation with tourism industry players. The support of our industry players is very crucial for the growth of the tourism sector. And fourth, Tourism Malaysia is also focusing on strategic collaborations and smart partnerships with airline companies to increase connectivity, such as Qatar Airways. I've been talking to them, Emirates, and others that will bring tourist traffic to Malaysia through their flights. So next is also the Islamic Tourism Center, which have partnered with many international organizations, such as the Organization of Islamic Cooperation, where we are the lead coordinator for the development of the standards for halal spa under the Standards and Metrology Institute for the Islamic Countries, or we call it SMIIC, an organ of OIC. Again, we also want to leverage on new consumer behavior. As I mentioned earlier, there are new trends to observe post-pandemic. However, one market that is important to tap is the Gen Z and millennial travelers that is set to be the largest share of global population by 2040, numbering 2.6 billion people. So we have done our survey on this. These are the risk-averse group, age, and consider travel experiences a priority with a focus on authenticity and sustainability. Well, aside from that, there has been emerging growth in travel tech innovations. Between 2010 to 2020, around $455 billion have been invested in travel and mobility tech startups. We have seen a surge in solutions focused on search and booking platforms. And now this has evolved to transportation, healthcare, and food and beverage, all at one's fingertips. There is a huge potential for this. And while MOTEC and Tourism Malaysia can work towards facilitation, the industry too must be ready to adapt. If you allow me again, I can talk about online and offline, enhanced tourism promotion. I have time a bit. Anyway, Tourism Malaysia will develop online and offline marketing strategy via
Right.
virtual or webinars. I'm sure you're interested in this.
Yeah,
Virtual
marketing is
roadshow. Yeah, exactly. And social media where users, followers, and product owners share special interest packages and experiences in live streaming actions. By optimizing e-marketing, content and stories on destinations in Malaysia can be increased, and frequent updates on health, safety, and hygiene of destinations in Malaysia can be provided. So apart from that, the content structure can be streamlined and aligned with the ongoing advertising and digital campaigns, as well as social media platforms and online travel media in the market. Well, Tourism Malaysia's digital presence and reach would be diversified by creating mobile apps. Many people have been asking me this. We have virtual events, booking features, and videos and photo contests to strengthen the destination branding across all digital platforms.
Do we have an
And
app already?
yeah.
Do we have
Sorry? Yeah, we're
Tourism
building
Malaysia?
it, and then we're building and also in the process, because we are creating. You see, after the COVID-19 stuff, we have to give priority of our funds to other uses. For example, putting food on people's tables. So now we are rebuilding all these to encourage more of the promotion and advertising to be done through online, through apps. Apps are in the process as well, but of course they are also already in existence, but not as much as what we would like to see. The aggressiveness of the apps to entice people to come. There are more. We are talking about in terms of the contents. Okay, so besides online promotions, Raymond, offline promotions such as roadshows, television and radio advertising, publications, and actually, like myself, wherever I go, this morning at 7:30, I was requested to have breakfast with somebody at their cafe, and just do a small promotion. You see, our followers, there are quite plenty of them. So this is one way. Myself as a minister, I do my own promotion to help out. So traditional marketing segments targets the older age groups, and we also want to optimize strategic communication like media engagement. More engagement is also needed with the media and the key influencers. We will be identifying more of engagements to be done. We have to be aggressive in all this because of the newly reopening of the tourism. Actually, Raymond, I have plenty to share with you, but I do not want to take away time that is supposed to be for others. But if I can talk as much as possible, because I am very excited to talk to a different kind of a different audience, segments of audience, for them to know what we are doing. Actually, we have more
Yeah.
to offer. But I know you are, you are eager to tell me, okay, please stop. No, okay.
No, no.
I
I
understand.
wanted
I
you to
understand.
continue, but unfortunately, Ibrahim Sani is going to ask me to stop.
It's
Okay.
okay. I would like to thank Ibrahim as well and everyone. If you
Yeah.
want more information, we can share in the future. All right. Thank you
Yeah.
very
Thank you
much.
so much, YB, for your
Thank
time.
you.
I think
Well, thank you,
you're
Invest
doing as
Malaysia.
much as you can in Motec, to help facilitate travel. But
Right.
everything also has to depend on what your colleagues in cabinet and the MKN
That's right.
decide. So
Yeah.
we hope that the country as a whole will move forward, especially on reopening the borders, because that is really the key, especially to
Yeah.
China. Hopefully, that some
That's right.
arrangement can be worked out,
That's right. Yeah.
so that we can bring in the Chinese tourists again. So,
Yeah.
yeah, yeah, I think that's very important because there's such a large spender and there's such a large group of people who are
That's true.
willing to travel.
That's true. Yeah. Well, I
Okay.
thank everyone. I would like to thank Invest Malaysia. We can talk again in other sessions. All right.
Yes, we can.
Thank
We
you
can.
once again. Yeah, all the
Thank you so
best,
much.
and
Yes.
yeah, always comply with the SOPs.
Enjoy the rest of your time in Terengganu and keep
Well,
that
you
memory
too.
of
Yeah, thank you.
surviving fresh.
Right. Thank you very much. Yeah.
Thank you very much. So I'll hand over
Yeah.
the session back to Ibrahim Sani. Thank you, YB. Take care.
Thank you, woman. Yeah.
Thank you, Raymond, as well as Yang Berhormat Datuk Sri Hajah Nancy Shukri for that rather entertaining conversation. We'll go for one short break. This is a screen break. We'll be right back at 11:10 a.m. very shortly later.
At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And there are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia. CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
Welcome back to Series 2 of Invest Malaysia 2021, Rebuilding a Sustainable Economy. In this session, we will be discussing on how to empower Malaysia's digital transformation with My Digital. Joining this discussion, we have a panel of speakers. They are Dr. Fadullah Suhaimi Abdul Malik, the chairman of the Malaysian Communication and Multimedia Commission, or the MCMC, and Fabian Bigar, the CEO of My Digital. Moderating this discussion is Yang Berbahagia Datuk Muhammad Omar Swift, the CEO of Bursa Malaysia. Datuk Omar, over to you.
Thank you, Ibrahim. And firstly, gentlemen, thank you for joining us this morning on what is a very topical topic. Now, I think perhaps, let us perhaps set the scene, if I may pose a question to you, Fabian. A brief overview of My Digital Economic Blueprint and its key thrusts, and then we can get into the meat, so to speak.
Okay, thank you, Datuk. Good morning, everyone. Okay, let me start with the vision. Of course, the vision of the Malaysia Digital Economic Blueprint is for Malaysia to be the regional leader in the digital economy and achieve inclusive, responsible, and sustainable socio-economic development. It has three objectives, namely to encourage industry players to become creators, users, and adopters of innovative business models under the digital economy. And second one is to harness the human capital that's able to thrive in the digital economy. And finally, to nurture an integrated ecosystem that allows society to adopt digital economy. And there are 6 policy thrusts. Number 1 is to drive digital transformation in the public sector. That's very important. Then to boost economic competitiveness through digitalization, to build enabling digital infrastructure, to build agile and competent digital talent, to create an inclusive digital society so that no one is left behind, and finally to build trusted, secured, and ethical digital environment. I may just want to highlight a few of the initiatives under this blueprint. There are actually 76 initiatives, but I'll just highlight a couple important ones. Of course, number 1 is for broadband to be mandated as the basic infrastructure to ensure internet access for new developments, for equal access to broadband services. Of course, to introduce My Device program using public-private people partnership to ensure all students in Malaysia can access to digital learning. And finally, to strengthen the data protection and related regulatory framework to ensure holistic personal data protection and privacy.
Thanks, Fabian, for setting that. I mean, clearly, a theme, you've highlighted through 3 themes, but it's about inclusivity, if I may. And that then leads me on to my question to you, Dr. Fadullah, around the 21 billion Jendela plan. If we could perhaps give us a little bit of context, what's our progress since its unveiling in August of 2020, because it is a part of that inclusivity, providing 4G access to all, lifting that digital, if you like, removing the digital divide and the equal opportunities and perhaps some of the challenges that are being faced on the implementation by yourselves and industry players.
Thanks, Dato', for very good morning to everyone, and to my learned panelists, Sir Fabian, and our distinguished moderator. Now, when you look at the Jendela was something that was mooted as a result of the severe pandemic that we all had faced in 2020. Okay? So it was announced on the 29th of August, and it is only hardly less than 14 months since that was announced. Now, in that 14 months, what had happened? Number 1, we had identified the targets that Jendela needed to achieve. Okay, Dato' mentioned the quantum of 21 billion that would be spent, and that amount of money comes both from the private sector by and large, as well as the government via the Universal Service Provider Fund managed by MCMC. Today, 14 months down the road, we have actually produced 4 quarterly reports, and thus far we have been able to achieve the quarterly targets set forth by the industry at the outset of the program. If I can give you a summary, the first key thing is to get fiberization out there. There are 9 million premises around the country. To date, we are at 6.47 million premises where we have fiber passed, okay, which gives us a huge number of premises that has access to fiber. That's the first. Second, in terms of the 4G coverage, we have increased it to close to 95% of the populated areas. And for the average broadband speeds on the mobile, today we have hit 31 megabit per second from an earlier value of only 25 megabit per second in August last year. So there has been progress. Certainly there are challenges. Okay, people still do complain about quality of services. So as we had mentioned earlier, the first phase of our effort is to improve coverage, and second, we will then improve the quality of the services. Okay, and to that we currently have the Jendela map that whereby individuals could then log in and do tell us where exactly the quality of service is lower than your expectation, so that the quality of experience would be at the level that befits your own utilization of the service. So, and last but not least is to actually ensure that the policy of making broadband a utility is key. I'm pleased to inform that every state in Malaysia, save for Selangor, which is has got a bit of a slight challenge, have all adopted making broadband a public utility. Okay, and with that, the local governments have also adopted the various procedural requirements to make that a requirement for all new development. So, which is a good progress, because this is something that we had spoken about for many, many years, and in the last 14 months, this has been taken on positively by the state governments by and large.
Thank you, Dr. Fadila. So clearly we are becoming inclusive, we are removing the digital divide, and that's an excellent result. I think the next key enabler, of course, is cloud, and there was a statement of intent of migrating some 80% of public data to a hybrid cloud by the end of 2022. And if I could perhaps pose this question to Fabian, are we on track? We have 4 approved cloud service providers. What are you able to share with us about their plans and their respective roles? Without giving commercial secrets away, of course.
Okay, thank you, Dato'. For that question, actually, this initiative is led by Mampu. Mampu is the lead implementing agency. And I can tell you that they're working very, very hard to finalize the contract. And yes, if we track their progress, all I can say is I can say that they are on track. But if it's still the thing that is still in the works, then I won't be able to discuss much more than that. Discuss much more than that.
I had to, Fabian, I had to ask the question. We were all
try.
wondering. We have to try. Okay, I mean, well noted. But besides the above, I mean, perhaps if we look at it from an investment perspective, what else can we do as a nation to attract more foreign and local investments, to position ourselves as a regional data hub? Because Malaysia is wonderfully positioned to fulfill that role. Fabian, your thoughts?
Okay, I mean, number one, of course, as you know, we are putting our act together with the what you call establishment of My Digital. I think we are trying to make sure that whatever is promised or put out in the digital economy blueprint is being tracked and ensure that it is clearly delivered. Number one, and then of course there's the facilitation process. In addition to having all these incentives put in place, we want to make sure that it's easy to do business in Malaysia. I think that's the number one so-called proposition we had to drive further investments into the digital economy.
Thank you for that, Fabian. I mean, if I may, and turning the lens perhaps to the regulatory side, Dr. Fadullah, what were the main objectives of the recently introduced cloud service regulation, which is to come in effect January 2022? What colour, I mean, there was some concern previously raised that the regulation could subject data centres and CSPs to comply with search and seizure orders by law enforcement agencies, and that would then discourage the data centres or be self-defeating. Does the new regulation address these concerns, Dr. Fadullah?
Before I answer that, let me just take a few steps back. You did ask about what will make Malaysia attractive. Okay, obviously there are three things that would make Malaysia attractive. Number one, it's connectivity, making sure that Malaysia is well connected to the international market. Second, you have a robust infrastructure domestically that allows for data to be moved quite instantaneously from point to point, okay? And thirdly is to create a trusted environment. Okay? So on the first premise, you have the submarine cables landing, in Malaysia. A couple of investors have already made their public announcements of such. Well, we may win some, we may lose some in the submarine cable, enabling to attract some of the cables, but that does not mean it's all lost. Okay. Second, we have got an increase in internet exchange points in the country. We are targeting to have 78 from 12 today, come 2025. And thirdly is in relation to the trusted environment. So when you talk about trusted environment, what helps to provide a trusted environment? The trusted environment is when you have a regulatory framework that provides protection to both the investor as well as the end user of a service. Okay, so when you talk about the cloud services, data center for as long as it had been in Malaysia had always been licensed. Okay, let's not go away thinking that it was never licensed. It had been licensed from the year 2000. So that's 21 years ago. Okay, so the only thing that is new today is in relation to the cloud services, which is a very new technology, and it is open to concerns of data protection, both for the investor as well as the end user. And to your point about the lead enforcement agencies, by having a license, in this case a very light touch license that costs no more than 2,500 a year, okay, of Malaysian ringgit, the licensees would be accorded a protection by way of the regulator, whereby you do not have to be subjected to any to a very high-handed approach of any law enforcement agency. Okay, because there will be guidelines that each licensee will adhere to, which will form a set of protection against any untoward law enforcement actions. But that does not mean that the law enforcement cannot take action if the law has been contravened, but it provides a protection whereby MCMC will then play the role of facilitation and making sure that the investment as well as the data residing within the cloud services is well protected for both the investor as well as the end user.
A very good point. I mean, looking at the question of the trusted environment. Now, clearly, CSP, data center, connectivity, and the missing piece, and we'll touch on, is submarine cables to strengthen international connectivity. Now, we have our submarine cables, and clearly, as we've all experienced, when the cable goes down, and it has happened from time to time, the region suffers because the bandwidth, if you like, is going from the US and coming to here, depending on who's streaming Netflix and Disney, etc., on a given day. Now, as you bring it in, we are building more capacity is being put in, and what we've seen is there's been a mention of some ringgit Malaysia 1.65 billion investment by a number of telcos in submarine cables up until 2023. Perhaps, Fabian, if you could provide a little bit of colour around that connectivity and those investments, and how that will be a key catalyst and enabler for that transition for My Digital as well as IDR 4.0?
Yeah, okay. Dato', the 1.65 billion investment mentioned, I think these are numbers, if I'm not mistaken, these are numbers that turn up in the lab. I think Dr. Fazul can attest to that, because these are numbers that mentioned by the telcos in the lab when it was the National Connectivity Lab 2.0, if I'm not mistaken, that was conducted by MCMC. Of course, we are checking, to see whether these are being, delivered, as time goes on. So that's what I can tell you here. I'm not sure if Dr. Fazul want to add to that.
Well, with regards to the submarine cables, in general, most submarine cable operators do not publicly share information as to the plans. Okay, the plans will always be announced once they get the project to be green lighted by their shareholders. But nevertheless, like I said, there had been an earlier announcement by a cable provider, MIST, whereby they have provided intention of investing 400 million USD. So that basically quite close to the quantum that had been cited in the lab. And in reality, there will be a lot more cables that will be invested, but I'm not at liberty to share. All I can share is that there will be an aggregated capacity of north of 400 terabytes. Okay, today we are at 42 terabytes connected out of Malaysia, and that would grow by a good tenfold in the next couple of years.
Well, thank you. And if I may, a topic that has been some discussion in Parliament and even on TV, chat. I can see the smile on your face. You know where I'm going with this conversation. Cabotage. Now, clearly, I think we have a landing on it. Measures have been adopted to ensure that the policy is set, and repairs will be undertaken expeditiously, and then removing the concerns that were previously expressed. But Dr. Fadul, if you could give a little bit of colour on that, and I mean, there has been information and disinformation as the case. Well, let's take this opportunity to not say lay our cards on the table, but provide clarity to all our investors and those that have joined us this morning.
Okay. Let me just share with you a little bit of history, okay? Way back in 2010, I'm sure many of us will be familiar with the Economic Transformation Program, okay? At that point in time, the connectivity out of Malaysia was less than 2 terabytes, okay? And at that point, there was a target to do north of 7 terabytes, okay, over a period of 10 years. Everybody felt that it couldn't happen. But look, today, 10 years, it's 10 years down the road, we've got 42 terabytes. So that is way above the 7 terabytes that we had actually, planned way back in 2010. If you look back in history, in 2010, the cabotage policy was already in place, all right? Did that prohibit any investment done on the submarine cables? Obviously, the numbers tell us a different story. And we've seen this debate about this cabotage policy and all. Now, if we cut through all the noise, the reality is that for any ships to undertake work in the country, they will need to have a license. That is called the DSL license, which was that's issued by the Ministry of Transport. Even during the period of 2010, the period of 2018, 2019, DSL was still key. And one of the biggest problems of DSL was the turnaround time. Okay, and that is when you have all these problems of late, repairs being undertaken. Today, as had been announced by the Minister of Transport, we no longer have DSL. What we now have is called EDSL, which means everything is now made online, and the approval for such a license is now shortened to as fast as only 1 day. Okay, and now that is a lot faster than than the double-digit numbers that we used to face years ago. Okay, so in a way, this has made business a lot more simpler in the country. Let's cut through all the political agreement and disagreement, but just look at the process. The process is that the EDSL license takes you as fast as 1 day, or as late as 7 days at most, subject to documentation. And second, the process of approval no longer have a third party being in the process where it could cause conflict of interest. Okay, today that is all undertaken by government agencies, and hence we have a very expeditious approval process that we have today. And hopefully this will put the whole debate to rest, because what's important is to look at the real process, whether or not there is cabotage or no cabotage. DSL is there, and today we have EDSL. And hopefully that would put this debate to rest once and for all. And let's just not, let's move on to a different conversation.
Thanks, Dr. Fadullah, and thanks for that clarity. I mean, the key piece that has also been missing from the debate is, are there assets that actually can undertake the work in a timely manner as well? One part is the approval, the other is the actual vessel and the team that is needed to actually be deployed. And I do understand deployment can take some time. So it all augurs well for our movement in the development of our market and the development of both our digital industry as well as our seafaring friends. Now, moving on to another topic that has been of some debate and of much interest, because it is a key enabler, is National 5G Wholesale Network by DNB. Now, I'm not going to, if you like, if I may, what I'd like to explore is perhaps there have been different models, and we've chosen this model in Malaysia. And perhaps, Dr. Fadullah, a few thoughts as to why, in our mind, this is the right solution for us to provide clarity to our investors.
Well, coming from the CEO of Bursa himself, that's very good, very interesting. Because what's important for your companies that's listed is to ensure that you have a very good healthy return on the shareholders' funds, right? And to do that, you certainly do not want to have additional financial burden on a company that could then limit its ability to provide dividends. So when you look at the whole network in the country, number one, Jendela is in play from 29th of August. You mentioned the quantum of 21 billion. Okay, and that the figure could also increase simply because there will be higher demands for certain elements of the network that will require further investment. Okay. Can you imagine 21 billion being invested in the country over a period of less than 5 years? That's a lot of money to be expected to come out of a private entity. Load that up with the cost of 5G, that could run anywhere between as low as 7.5 billion per network. And if there are 4 networks, based on the report of the National 5G Task Force, you're looking at 30 billion. So all in all, you're looking at north of 50 billion play over a period of 5 years. Now, that's a lot of money. Okay, and the question is then, is that the right way for us to use our limited resource? Second, when you look at mobile networks, a key component in a mobile network is spectrum. Now, if you were to then have multiple networks, therefore the spectrum needs to be divided by the number of network providers. What happens is then is that as the users of data increases, the spectrum availability will then will be utilized pretty fast, and the next thing you know is that you end up having a congested network, which then negates all the efforts of wanting to have a speedier network called 5G. So taking into account the financial burden, taking into account the technical burden of demand, hence the single wholesale network was then mooted. Is that the best solution? In any given time, many models would come into play. It may have its pros and cons, but in our instance, we needed to expedite the rollout of 5G, earlier rather than later. The game plan was to roll out in 2023, but today we needed to roll it out by end of 2021, and hence the option of single wholesale network. Now, with a single wholesale network, we also identified all the downsides that would come with such a approach. And to do that, we have also undertaken our own study, and that study had been validated recently by Digital Economics by CGS-CIMB, where we said everybody is on the same page that there could be downsides, but these downsides are being treated. Okay, and therefore we will see redundancy being put into play, equal access to the network, price per gigabit to be much cheaper than it would be on 4G, and all that will come into play with minimal duplication of networks. So a lot of arguments have been put out there, and I would say the best way to really debunk all of this is to see the realization of the network made available commercially come December. So it's not too far away. We are today on the 9th of November. God willing, in about 30 to 40 days from now, that network would be available commercially.
Thank you, Dr. Fadul. I mean, the key thing is MC plays a role as regulator, and we'll be looking at the reasonable wholesale pricing, equal access. Yep. It is enshrined, and in many ways that will address the concerns. As you know, my previous life, I was building gas network, and you want, it is most efficient to have one operator rather than having multiple towers. I think we can all remember the days of Celcom and Maxis and multiple, no offense to my friends at Digi, of course, and Axiata, who are merging, but I'm winding back the clock sometime. So it is about building networks efficiently and running them efficiently, and that is, if you like, the role of the regulator. I think, would there be, do we envisage the ability, say for example, as a developer, I want to incentivize the rollout to my area? Is that catered for, Dr. Fadul? And how would that process work? Because clearly competing resources, we have competing resources, not only in financial terms, but actually in capacity, right-of-way, access to site, etc.
Sure. Right. So this is where I mentioned just now making broadband a public utility. Okay, therefore, any new development, you will not get the right to develop unless you can provide in the plans that you will provide telecommunications infrastructure, both for fixed as well as for mobile. Okay, now, once that happens, therefore, the service provider would come into play would be the retail service providers. Friends like TM, Celcom, DG, Maxis, the guys that you know who offer services today. Okay, they will be the ones who will be linking up with the developer to make sure that the plans for infrastructure would be made available in the application for such a development. And this is where if 5G is a requirement, the very same service providers would actually have the right to buy access from DNB to then provide the 5G network into a given area. Okay, so this is where, if you want, you got to connect the dots between the wholesale player, the developer, as well as the retail provider just as well. Okay? And today, that is already available even in the 4G space, where you have what we call as virtual mobile virtual network operators, people who do not have a network, but they buy capacity of the mobile network operators. So imagine today TuneTalk. Okay, TuneTalk serves a whole big population of subscribers, but they don't own a network. They buy that network off one of the mobile network operators. So it's a similar model for the 5G just as well.
If I might pose a slightly cheeky question, which I've been known to do from time to time, how do we ensure that the rollout remains within budget? It's always a thorny issue, and it's a fairly large spend, of course. And so
Yep.
everyone, I mean, from a context, it needs to be on time, on budget, all those good things, and because it is an accelerated rollout. From a regulatory perspective, how does one say? Do we have teeth?
Well, with regards from the regulatory standpoint, okay, number one, the license would require DNB to roll out within the plans that they submit because it is tied to their license. So that's the first thing. Second, the onus will be on DNB to ensure that the rollout is done within the set time frame as well as within the set cost frame, okay, because the access to the network would be fixed as a wholesale, okay. Therefore, you do not want to then price a product whereby the cost is much higher than the income that you get, okay, which is not going to do a world of good for the entity. So therefore, the onus will be on DNB to ensure that it remains within its given parameters of deployment. And third, we as a regulator, we will be monitoring the excess prices for wholesale, which again would limit the ability for DNB to raise its prices, okay, simply because they say if they were to say that I would my cost has gone beyond budget. Well, all we can say is that we take note of that, but as far as the excess prices goes, it is what it is that you have made publicly. So in a way, that is the control that we provide from a regulator standpoint to make sure that you do not have any cost overruns.
So there will be, if you like, there will be defined return on asset, very much like the PPAs for IPPs and so on.
Absolutely, that's something for DNB to deal with together with their financiers. Okay, so I'm sure you would have read that they have been given, I think Ericsson, I think, had been given a financing, support by a financial entity, and I don't think money is being made available without any conditions. Okay, and therefore those very same conditions will be passed on to DNB. Okay, but that is not something that we as a regulator will put our nose and our finger into it because that's something that the licensee will have to undertake on its own. But what is within our ambit is to always ensure that the cost of doing business, it is within the set parameters that we have set out under the wholesale access agreement.
Would those access agreements look at sorry, there's a little bit of background noise. Would those access agreements enshrine expected, SLAs are there, then there'll also be the costing of service provision. I mean, does that relate back to the investment? One assumes so, Dr. Fadullah.
It would, okay. What would I would simplistically put it this way. Number one, the access agreement will come with service levels, okay. Therefore, when you purchase a product, you certainly want to ensure that you have a certain level of service. So that's the first thing. Two, in the event that there's non-delivery, there should be a penalty. Okay, therefore, plans in offering services that need to be adhered to just as well. Because a wholesale, the last thing you want is a retail provider committing to a customer, but the wholesale provider neglects its own, the delivery. And third, as in all businesses, the rollout plan is tied to a business plan, and that business plan provides the return on investment, if you want, as to the business. And you would have heard that the DNB as an entity is not there to be a competitor, but it works on a cost recovery model. So which means it will have to make sure that it runs a tight ship. It gets its cost returns, and the benefits of all those savings is then onwarded to the retail providers, which you and I as end users would be the end beneficiary.
Thank you. I think there is, I mean, we're beginning to come to the end of our session, and again, my thanks for joining us today, and of course our audience for inviting us into their homes, for those that are working from home in their offices or wherever they may be. Now, I think as of course the exchange, we know investors love return. The focus, we're in business to make money. And that's not a bad thing. We pay our taxes and we create jobs and so on. Now, as a national imperative, we need, we use the term ubiquitous, but easily access data. It is an enabler as we pivot to green. And for dear audience, I'm sure you've heard me at length talking about ESG, and we're not talking about ESG today, but actually data is a fundamental enabler. So if I may pose the question, how strategically, how do we balance the need for affordable and great ubiquitous and good service to Malaysians while incentivizing investors to be in the space to actually provide this service? It is I imagine it is a difficult balancing act.
Well, from a regulator's standpoint, it is a very difficult question to answer. Okay, but certainly data would be the new oil. Okay, and to do that, for data to move around, okay, as I talked about the trusted environment, so that is going to be very, very key, both from a regulator standpoint as well as from policymakers, the likes of MIDA and all, because what you want is to have more investors coming into the digital space. Okay? The other part that I think the government is doing a lot of work on is categorizing data. Because today, our biggest challenge is how do we categorize data? Because there's some data that is highly secretive, some data that is open for general public. Now, how do you make that distinction? So that's something that Mampu is already undertaking. Maybe Fabian could add a bit of color to that. But I do know that that is one of the very key things that we are doing. And last but not least, on our homework pad at MCMC is to look at the Digital Signature Act, because at the end of the day, when transaction happens, you want to make sure that the data is connected to the right people, if you want. Okay, and a Digital Signature Act framework provides the level of recognition as to who sends out the data and who then receives the data, and in between there is already a framework that protects the data as it is transmitted along the corridor of the cloud.
So I mean, so we provide investors certainty so that they understand exactly obligations and also the protection they'll receive. I think the other piece, of course, if I can pose a question to you, Fabian, incentives. How do we balance up ensuring, because I look at Malaysia as highly strategic in our role, and if we look at where we're sitting in within ASEAN or Southeast Asia, geographically we are nicely situated for the laying of submarine cables and so on. So, but we need to remain competitive. So balancing up, then we have regulation on one side, but then on the other side we now need to be considering what incentives do we provide and landing points and so on.
Okay. Well, when we talk about incentives here, people normally, they think about financial incentives, tax incentives, or grants and so forth. But I don't think, incentives can just be categorized as those kind of incentives. You also need to have a healthy ecosystem to support their business operations and growth, and then, of course, the right talent and so forth. We have programs, like, for example, to attract foreign investment. We have introduced the Digital Investment Office that looks at digital investments and try to attract foreign investors to set up their operations in Malaysia. Whereas for local operations and all that, we also have nurturing programs that's under MDAC, and then you have the National Technology and Innovation Scheme to support innovation and tech development. You have new allocations, recently announced, such as the 30 million, I think, or so, to set up the Industrial Revolution 4.0 International Innovation Hub at TPM, or Technology Park Malaysia. Then there is this announcement on DESAC, or the Digital Ecosystem Acceleration Scheme on the MIDA, to assist digital technology and digital infrastructure providers.
Now, as we're moving into, if I may, audience, if you have questions, please do pop them through on Slido. I have a number from the floor. Perhaps I think there's an interesting piece as a key enabler. I mean, data is a key enabler. We're building the infrastructure. We're providing a conducive regulatory environment. I mean, from the context, from your perspective, gentlemen, how does our current policies, if you like, we're very unicorn focused at the moment at the exchange. It is a very topical matter. It is bringing, if you like, new economy to market, new economy to Malaysia. And so your thoughts on how current digital policies support the growth of this pivot to new infrastructure or the new economy or the Internet of Things, manufacturers of content as well as hardware. Your thoughts? Dr. Fadullah, I don't want me to put you on the spot, but Fabian wasn't making eye contact with me through the camera, so I'll ask you.
Sorry.
Okay. Well, you look at actually when you look at data as an economy, right? Many things need to happen. Okay? Whilst on one hand we talk about the ease of doing business, but more importantly, I think the outlook of the country needs to change. Okay, whereby when you look at digitalization, we have to realize that Malaysia cannot compete in the wider economy the same way it used to compete before. Okay? Today, I think we can no longer compete on cheap labor. Okay, but we certainly will be able to compete with value-added services. Okay, because the level of education in the country has reached a different level than what it used to be many years ago. Okay, so today, while manufacturing will still be the name of the game, but the question is, what type of manufacturing do we need to talk about? When you talk about services, how do we then move into value-added services? Because there are many countries, if you look around the world, where they may not have the right level of natural resources, but they make a name for themselves in the economic world simply because they were able to then leverage off their greatest asset, their people. Okay, and for that, this is where I would say when you look at the new economy, Malaysia is poised because we have the right level of workforce. The question now is, how can we then harness this workforce by way of existing manufacturing and businesses that we have today to use this workforce to offer better value-added services to the greater market. So if you want, moving up the value chain of the whole value chain of a particular industry.
Yeah.
Maybe?
Okay. If I may add to that, Dr. Fazullah is talking about the businesses and all that, but the other moving parts of the economy, for example, the government transformation into a digital public service, digital public service delivery to assist the private sector or to facilitate the private sector, and then the education system. I think on top of all that, there needs to be a national ambition. There needs to be a national, I would say, not only ambition, but obsession, to make Malaysia a digital nation by, say, 2025. Now, how do we do that? If I look at it, we always use ease of doing business ranking, and now, of course, the World Bank has discontinued that. Then you have the the indexes that measure the digital competitiveness of the country. Now, we are, say, number 26, if I'm not mistaken. The last couple of years, we have been sliding down, not because we are doing badly, but because other economies have been catching up. I feel there has to be an obsession to put us to say top 10 in the next couple of years. So we have to work towards that, and that message has to be spread all throughout the country, to all the various players.
Yeah, I think it's a key. I mean, for example, we look at Bursa. Today we're on-prem. The conversations we're having, we want to go off-prem, but we're actually looking at cloud as a service. How can we deliver the service we have today? I mean, our aspiration is to democratize investing and that would be using a handheld. This is no advertisement for whichever brand of handphone I use, but it's an empowerment tool. So data is clearly empowering the change. It drives efficiency, it aids collaboration, as we've seen during the pandemic. Even as we move into endemic status and offices and buildings and businesses are opening again, we're all being very mindful of staying safe, and I think that's the key, and hence we are all not in a big room today, but we're doing this virtually, and I think we have efficiency. We're having, to be frank, we're having a wonderful conversation, sharing our thoughts, taking feedback from the participants who are posing another question. Now, as the clock is winding down, I think if I may pose one question, and I'll pose it to you, Fabian, first, if I may. In closing, what key competitive advantage would differentiate Malaysia from our regional peers as we fight for capital and access and so on for digital investments? Just top of mind.
Well, I guess the most important thing for us, is to be, to have that enabling environment, business friendly, ensuring that we, speed of doing things, that is key. Of course, to enable speed of doing things, again, it's a chicken and egg thing. You have to have digitalization in place. Otherwise, how do you speed up, the processes? So, and of course, transparency is one thing. And for me, as you digitize your processes and all that, you also offer transparency, because you can't hide with data, right? Once it's made available, and once the process is digitized, you can't hide those things. Those are now made transparent. So those are very important things.
Thank you so much, Fabian. And if I may pose the same question to you, Dr. Fadullah.
Yeah, I think one thing is the paradigm shift. Okay, if we are to remain competitive, okay, be it in the region or in the world, number one is the paradigm shift. We need to move away from bureaucratic thinking, okay, because processes that gets digitized should actually reduce the bureaucratic processes, okay, which will then allow businesses to flourish, decisions to be made faster, be transparent, and obviously that will make Malaysia very attractive for investment, be it physically or even investment that could be connected to Malaysia virtually.
Thank you. Now, our time is drawing to an end, so on behalf of the Exchange and our co-CGS-CIMB, our sponsor today, I'd like to thank, and on behalf of the audience, and myself in particular, I'd like to thank Dr. Fadullah Suhaimi Abdul Malik, Chairman, Malaysian Communication and Multimedia Commission, and of course, Mr. Fabian Biga, Chief Executive Officer of My Digital, for spending time with us today and sharing your thoughts, and to be quite frank, your candor and honesty. It was, it's always good fun to talk, gentlemen, and I'm looking forward to seeing the rollout of 5G and how it enables new businesses to flourish, new ideas, and the whole, if you like, the whole onshore-offshore conversation as we roll out more network onshore, as well as the submarine cables that make it all happen for content. Thank you everyone for joining us today. Have a very great day.
Thank you again.
And more importantly, please stay safe.
Thank you, Dr. Omar. Thank you, speakers, for that delightful conversation. I now have the privilege to invite Puan Ruzi Rani Ajith, the CEO of CGS-CIMB, to deliver the closing remarks. Puan Ruzi.
Yang berhormat, Senator Datuk Seri Utama Tengku Zafrul Tengku Abdul Aziz, Minister of Finance Malaysia. Yang berhormat, Datuk Seri Haja Nancy Binti Shukri, Minister of Tourism, Arts and Culture. Yang berbahagia, Datuk Syed Zaid Alba, Chairman of Securities Commission. Yang berbahagia, Tan Sri Abdul Wahid Omar, Chairman Bursa Malaysia. Yang berbahagia, Datuk Omar Swift, Chief Executive Officer Bursa Malaysia. Yang berusaha, Datuk Fadullah Suhaimi Abdul Malik, Chairman Malaysia Communications and Multimedia Commission, Yang Berbahagia Mr. Fabian Baiger, Chief Executive Officer My Digital, CGS-CIMB Board of Directors, distinguished guests, members of media, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh, and thank you for joining us today. Before I proceed to my closing address, I would like to thank Bursa for partnering with CGS-CIMB to make Invest Malaysia 2021 Series 2 virtual conference a success. What a fantastic day we had today, with great discussions, insights and engagement from our astute speakers as well as the audience. As we are now in the endemic phase and the number of COVID cases continues to decline, we have found ourselves in a new normal where social behavior may have changed for good. Following the tabling of Budget 2022, we are encouraged to see an expansionary and inclusive budget, one that continues to focus on supporting the rakyat and strengthening Malaysia's economic recovery in the near term. Budget 2022 also has in mind the aspiration to empower Malaysia's competitiveness and economic resilience in the future. With ESG investing principles at the prime of importance of investing community today, we are heartened by Budget 2022's rollout of incentives to advance Malaysia's green economy agenda. As Malaysia has fully vaccinated 95% of the adult population and 62% of teenagers, we are now set to reopen our borders to international tourists progressively. The government's plan under Budget 2022 are to help tourism players to recover from COVID-19 pandemic and to prosper in the years ahead. This is something that all of us welcome with great aspiration, as tourism is a key component of Malaysia's economic prosperity. On digital transformation, the key thrust of Malaysia's My Digital Economy Blueprint, the strategies and initiatives that will be undertaken, will be a critical component towards attracting local and foreign investments. Hence, positioning Malaysia as a leading digital hub in the region is key in driving the country's economic growth and creating job opportunities in the new digital economy era. Certainly, we are in a new world era where it would not be the same as before. With that, we anticipate year 2022 to be the year of technology innovations and green investment with ESG compliance. To achieve the alpha that we want, we need to change with time. As Darwin puts it, the one who is most adaptable is the one that survives. With that, I would like to conclude today's conference. Thank you. Wabillahi taufiq wa hidayah. Assalamualaikum warahmatullahi wabarakatuh. Stay safe and happy investing.
Thank you, Puan Ruzi. And that concludes the Invest Malaysia 2021 Series 2, Reviving Malaysia's Growth Engine. Thank you to everyone who has made this event a truly enjoyable one. And we would like to also be pleased to let you know that the next Invest Malaysia Series 3 will take place tomorrow. And we want to also invite all of you to attend tomorrow's event, which will begin at 8:30. There's also the session replay for today's event. You can make it, you can find the replay session for Series 2 on Bursa Malaysia's newly launched platform called Bursa Broadcast. You can find Bursa Broadcast by exploring the Bursa Malaysia website. Until then, thank you very much for attending. Assalamualaikum warahmatullah, and then we'll meet again.